And TSMC beats. Taiwan's largest chip maker sees profits climb as a global semiconductor shortage shows no signs of abating. Good morning, everybody. Welcome to the second hour of the European Market Open. 20 seconds to go until the start of European cash equity trading for this Thursday morning. And we look to be in slightly better form in terms of appetite for risk than we were just half an hour or so ago, or certainly an hour ago. European futures point modestly to the upside. In a contrast with the start of the week, it seems FTSE futures are showing a little bit more upside than CAC futures this morning. So we could see some gains coming through in London. Yesterday, one of the big stories, of course, was a rise in oil prices, commodity prices moving higher. And we'll see if that has any further legs to go. We sit with 66.74 as the price of a barrel of oil on Brent crude after some decent gains in yesterday's session. So European equity markets then opening to the upside. The FTSE 100 out of the gates first and is up by 0.2%. The IBEX over in Spain also up by 0.2%. We have some interesting themes going around these markets, but nothing necessarily particularly in the driving seat as we sit here this morning. Concerns around what's going on in the bad debts sector over in China. Perhaps one of the things we're trading around bank earnings, another theme. Thinking about the Fed and its largesse, certainly a theme as always in markets. But this is where we are on European equity markets as we open up this Thursday morning. The CAC and the DAX making decent gains to the upside. Also then up by 0.2% or so. So Fed Chair Jerome Powell said the economy appears to be at an inflection point, poised for stronger growth and hiring from here on out. That's as the country emerges from the coronavirus pandemic. But Powell added that the Fed is unlikely to raise rates before 2022.
We will reach the time at which we will taper asset purchases when we've made substantial further progress toward our goals from last December when we announced that guidance. And that would in all likelihood be well before the time we consider raising interest rates. We haven't, voted on that order, but that is the sense of the guidance, is that it would work in that way.
Joining us now is Hugh Gimber, JP Morgan Asset Management Global Market Strategist. Hugh, very good morning to you. How are you thinking about the Fed at the moment? We've heard a lot from Jay Powell in recent days. We'll go into a period where we'll hear less ahead of the next FOMC meeting, perhaps. But when are you factoring in rate rises from the Fed? How are you thinking about the way that the Fed will deal with the building strong data that we're likely to see over the summer?
Yes, good morning, Anna. Well, I think this is really the point where life starts to get especially difficult for the Fed, because you're going to see the data pick up very rapidly over the coming months. We've all been talking about this for some time, and this is now really the point at which the strong growth outlook becomes fact rather than forecast. I think you are going to see some very impressive numbers coming out of the US economy. And so when I think about what that means for the Fed, they're not going to change their tone anytime soon. They'll want to sit tight, and they've been quite clear in communicating that they will want to see real strength across the economy before they consider changing policy. But I think for me, what's interesting at the moment is that if we do see momentum really pick up now, rather than in a couple of months' time in the summer, then it's going to change their tone in June when they go to their next set of forecasts. They're going to be edging closer to that substantial progress that Powell is talking about on the economy. And then that starts to have a knock-on impact for where they communicate tapering later this year. So I'd still be thinking about the tapering decision to be coming in Q4 this year, either starting late this year or early next. And then really rate rises at the beginning of 23, probably most likely at this stage. but the market is going to continue to test the Fed's resolve to look through near-term data, which I expect to be very strong.
Yes, and what is that test of the Fed's resolve going to look like then, Hugh? Because does that mean periods of volatility on yields, essentially? Does that mean we'll see strong data coming through, the markets will ask themselves, does this still mean the Fed stands still, the Fed doesn't hike rates, let's just test them and push yields higher? Is that what we're going to see? Is that what a test of the resolve will look like?
Exactly right. I think this is about bond market volatility staying elevated over the course of the summer, because clearly the Treasury market does look more reasonably priced today than it did coming into the start of this year. But still, you have inflation expectations not fully reflecting the Fed's ambition to overshoot their inflation target when you factor in the difference between PCE and CPI. And you have more room for real yields to push higher as well. So I would expect that we've probably seen the worst of the sell-off in Treasuries, but I'd still see further upside for Treasury yields. But ultimately, this is about volatility. And there's going to be significant potential for Treasury yields to overshoot on a frequent basis through the course of this summer as the data starts to pick up. Retail sales today is going to be another test. Inflation this week, earlier on Tuesday, went okay for the Fed. No big move in the bond market for them to worry about. But retail sales today, I think, is going to give us the next sign about the strength of the consumer, because we saw the sharp pickup that came through in the January data on the back of the stimulus checks that were hitting bank accounts at the beginning of January. And we now have much bigger stimulus checks having hit bank accounts in March. So I think there's going to be a lot that we can learn from that print this afternoon.
Yeah, and I wonder if we've learned a little bit from some of the bank earnings that we've had through, Hugh, about the way that US consumers are certainly handling that money they're getting and what they're doing with it and what they're not. What will stocks do then through that period of bond market volatility, Hugh, that you referenced? Is that going to lead to us questioning appetite for less profitable businesses, questioning appetite for tech stocks, as we saw earlier on this year, as we saw a spike higher in bond yields?
Yeah, so I think equities will take their lead from the bond market. And I think at this point, we'd be looking for further strength in cyclicals versus defensives. That's the main theme, I think, to get right over the course of the next few months. And clearly, there's been a pause in that trade as bond yields have stabilized just over the last few weeks. But as Treasury yields start to push higher again as we move into the summer, I'd expect that to catalyze further gains in your more economically sensitive sectors. So the financials look in a good spot to me from here. Places like industrials, energy as well. This is about embracing cyclicality in portfolios, really, as the data starts to drive further upgrades to earnings estimates in those more economically sensitive sectors.
Hugh, thanks very much. Stay with us. Hugh Gimber, JP Morgan Asset Management Global Market Strategist. More from Hugh in just a moment. Coming up on the programme then, Europe's vaccination race. The EU's health commissioner says the bloc is still working towards its goal of vaccinating 70% of adults by the end of the summer. We bring you the comments from Stella Kyriakides. That's next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European Market Open. 9 minutes into a European trading day that is turning to the green, a little positive this morning, up around up around 0.25%, shall we say, on European equity markets this morning. Let's take a look at some of the stocks that are on the move this morning. Danny Berger's here with a look at those. Danny.
Anna, well, a lot of the ad companies are on the move up today. That's surely helping the overall picture, really driven by publicists so far this morning, saying that their first quarter earnings not only beat, but they also see pretty strong expectations going forward, thinking that they can make up about 60 to 80% of the earnings that they lost in the second quarter of last year in this coming quarter. Also, one of the biggest movers today is ABB, the Swiss engineering giant. They've also upgraded their outlook, saying that for the full year, they see a 5% increase in earnings. Previously, they estimated a flat year, so now seeing their earnings being able to build onto last year. Finally, the company that's new on the markets and really cannot catch a break, that's Deliveroo. It's down about 2% so far this morning. They did have a strong quarter. Earnings more than doubled from the year prior, but they were really conservative on their estimates going forward. They're not changing their full year guidance, saying that they just want to be prudent because we don't yet know how consumer behavior has changed and how it will change once the pandemic is over. When it comes to the global macro picture, we are seeing a U.S. yield that is just drifting lower. Perhaps we're finally getting this idea of yields that are not necessarily dictated by inflation but growth. At the same time, though, there is just a lot to distract people in markets today. For example, you had Coinbase's IPO, which means that we are seeing some action in Bitcoin, flirting with those new highs, not quite there, but still some interest there after that debut, that direct listing from the crypto exchange. We're also looking at the Russian stock index, which is falling more than 1%. Some fears there of U.S. sanctions in Russia over the election and the solar hack. Anna?
Yeah, and we'll get further details on that geopolitical threat shortly. Danny, thanks very much. Danny Berger with the movers and indeed some macro themes for us. Now to the latest on vaccination rollout in Europe. The European Union's Health Commissioner, Stella Kyriakides, said the bloc is still working toward its goal of vaccinating 70% of adults by the end of the summer. She spoke with Bloomberg's Maria Tadeo.
This will make a total amount of 250 million doses in the second quarter from BioNTech Pfizer. So we are moving quickly with our vaccination strategy, and we aim that we will continue to have vaccinations picking up.
When you look at this new vaccines that are coming in and the delivery is going to be accelerated, that means that your goal for herd immunity, and that's September 21st, that is still doable and you're still hoping for that.
We had announced the 70% target full vaccination of the adult population by the end of summer. And in our communication that we had issued on United We Can Beat COVID-19, we are working towards that with the member states. Of course, it depends on the deliveries and the rollouts, but we are working towards that to achieve that target.
I am curious to know whether this contract that you've announced today with Pfizer, is that a response to Johnson & Johnson? Was that something that you were working on, or are the two separate?
I would say that it's part of our general vaccination strategy to have and secure the largest amount of vaccine for European citizens as quickly as possible. In terms of Johnson & Johnson, as you know, the company decided to withhold temporarily the deliveries in the EU. For us, safety of vaccines has always been a cornerstone of our vaccine strategy. And we follow a science-based approach, so we're waiting to see how this develops.
You're confident overall, and given the numbers that we were seeing before Johnson & Johnson, that actually the national component of this is actually quite well set up to some extent.
I would say that what we're seeing now is vaccination rollouts have been picking up, and in quarter two we expect this to continue. we really need to be very focused and work closely with all member states in order to ensure that citizens are vaccinated as quickly as possible, especially in view of the situation we have with the variants.
And, just as a final question, today there's also, as you know, a debate around the vaccination certificate. Do you foresee which vaccines are going to be included in that? And is it even, I guess that's the question, a good idea to travel over the summer?
The vaccination certificate should be ready, the final proposal, by June. I think it's important for citizens to feel that they have this level of predictability, that we can open up economies and travel safely.
That was the European Union Health Commissioner, Stella Kyriakides, speaking with Bloomberg's Maria Tadeo. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, is still with us. Hugh, let's think about Europe. The vaccine rollout, clearly one of the key factors to watch when it comes to a European economic recovery. One of our guests yesterday was saying that because that vaccine rollout has been somewhat delayed, it will then rub up against various political uncertainties, German election, for example, in the latter part of this year, and that could dent enthusiasm for Eurozone assets. How are you approaching the European narrative at this point?
I'd say I'm a little more optimistic than that, really, because I think for the European equity market especially, it's really been taking its cues from the rotation at a sector basis rather than the macro. The macro picture is clearly less positive in Europe than it is, say, in the US, given the differing speed of vaccine rollout. But it's the market composition that has actually allowed European stocks to perform very well this year, despite the fact that everyone has been talking about the pressures on Europe's vaccination strategy. So I am more optimistic that this is a decent outlook for the European stock market, given the sector leadership that we expect. And I think on the vaccine rollout, this story is now very well understood. We're perhaps past the point of peak pessimism on vaccines in Europe. We know that momentum is starting to pick up. And yes, that recovery is going to be a couple of months further down the line than we're going to see in the US or the UK. But I still think from the data that we have available, you're still looking at Europe getting it right later in the summer.
Yeah, that's interesting. Let me ask you then about that rotation and the sector exposures in Europe then, Hugh. So I'm looking at the factors to watch for the stock 600. I can see that value has already done pretty well when you look at the year to date. But that has further to run then, you think, Hugh? That's going to still be our theme as we work our way through this recovery from the pandemic.
Exactly, yes. I think value does have further room to run, because primarily this is about the earnings outlook. And what we see in Europe is that when the data is improving, you tend to see a pretty tight relationship between European cyclicals seeing further earnings upgrades than you do in European defensives. So yes, there are some bumps along the road. Yes, there's been a pause in this trade over the past few weeks, but I think that you still want to be tilting towards value. And if you think about that at a global level, a tilt towards value generally favors a tilt towards Europe, relative to the much more growth-heavy US market, which is why I think from a regional allocation perspective, the outlook for Europe still does look positive today, despite all of the gloom and doom around the macro.
And if we're looking for a continuation of a rally in value then, Hugh, where are you looking within Europe to find that?
Yeah, so two sectors that I'd highlight. One would be the financials, where I think we've had a decent start to the earnings season in the US. I'd expect some carry through for that from European banks. And then you'd be looking at industrials as well, those European companies that can really benefit from a pickup in global manufacturing. We saw from some of the trade data out earlier this week that it looks like demand from the Chinese is coming back quite strongly. That's an encouraging sign for European corporates. And so financials and industrials would be the two primary places to look. Then I think you can also have a dig into some of the consumer discretionary names and think about the parts of the stock market that are going to benefit the most from a recovery in consumer spending to come. Probably more of a domestic tilt to that. I think there's still some question marks around international travel being much later down the line as part of this recovery, but there'll be clear beneficiaries, I think, to find within consumer spending, given this bulk of excess savings that's being created from the bizarre nature of the pandemic in the way that it's limited people's spending whilst incomes have been protected by strong policy support.
Yeah, it'll be really interesting to see how those who are lucky enough to have accumulated those savings pots, where they choose to spend them, where they're able to spend them as we go through the summer. Hugh, thank you very much. Thanks for your time. Hugh Gimber, JP Morgan Asset Management Global Market Strategist. Hugh will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. Coming up here on the European Market Open, another big day for earnings in the financial space. We get figures from Bank of America, Citi and BlackRock. We'll break down what to expect next. This is Bloomberg.
Markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Keely Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Welcome back to the European Market Open. This Thursday morning, then 22 minutes into our European trading day, to be precise. European equity markets up by 0.2%. Bank profits, a big theme of this week. Wells Fargo jumped the most in almost 2 months after profits soared sevenfold, giving scandal-weary investors something to cheer. Bloomberg's Taylor Riggs and Romain Bostic spoke with the group's CFO.
The consumer's in a really strong position, and that's a good thing, right, for the overall country and the economy. You know, they have liquidity strong. They have more money in their deposit balances than they did pre-pandemic, and that is impacting in the short run, you know, loan balances. You know, you're seeing prepayment levels in the credit card business that are high. You're seeing you know, less need to borrow money, both, you know, on the consumer side, but also the corporate side. But as the economy starts to gain more momentum and you start to see, you know, a little bit more normalcy in life, and people get out there more, I think you're going to see more demand in an environment like that for credit.
That was the Wells Fargo CFO, Mike Santomassimo, there, speaking about the health of the US consumer. Certainly that is a theme of the bank earnings season, and one we'll return to. We've had 3 down, but there are more to come. JP Morgan, Goldman and Wells Fargo reported earnings yesterday, beating estimates thanks to a boom in investment banking. Next up are Bank of America and Citi before the US Open today. Joining us to discuss is Danny Berger. So Danny, some solid earnings coming through in yesterday's session, but JP Morgan's Goldman's shares still dropped. I know you've been thinking about and looking into why that was the case.
Yeah, and Anna, basically, from analysts I've spoken to, it's two schools of thought at the moment. One is just that expectations were really high and markets are really fickle, although you could look at Wells Fargo and Goldman, whose shares moved higher, so you could say, okay, perhaps that's not the case. It also might be, and what's starting to become the more prevailing narrative, is this weaker loan growth. And typically when you have a weak loan growth, it bodes pretty poorly for future earnings. Consumers and businesses at the moment, they're paying off their loans and they're not taking out new ones. Jamie Dimon, though, says it just means that the consumer is healthy and that government stimulus is doing its job. Goldman, as I mentioned, not the same story, really gangbuster trading results. David Solomon talked about it on the call yesterday.
Our first quarter results underscore the ongoing strength of our franchise and the supportive environment in which we operated during the quarter. We delivered the best performance in global markets in a decade, with strength in FICC and equities driven by solid client activity across our platform and reinforced by last year's market share gains. Importantly, we maintained a resilient and highly liquid balance sheet as we continued to deploy our resources to support clients amid an evolving and dynamic market backdrop.
So, Anna, he said it there, the number that really sticks out is a quarter of trading that was able to beat any other quarter during the past decade.
And Danny, what about the bank earnings yet to come then? We're going to be hearing from Bank of America and Citi today. What should we be watching for?
Well, I really think that they just have such a high bar to meet now with their FICC results, with their equity trading results, because the thought had been for this quarter, there's no way that they can beat what happened last year in March during the volatility. But banks have been able to do that so far. So Citigroup, Bank of America, can they do the same? Citi also has a lot of currency trading, and so far the results there have been somewhat weak. Also, consumer sector, that's going to be a concern for Bank of America, which has a large exposure there.
Danny, thanks very much. Danny Berger with the latest on the banking sector. We'll certainly keep an eye on that. Just a bit of breaking news coming through, and I mention it because it is moving one stock in particular this morning. According to a Business Insider report, a court in Germany has ruled that Berlin's rent cap is unconstitutional. I mention this because Deutsche Wohnen is on the rise as a result of that. That particular share price up this morning by nearly 5%, 4.9% to the upside on those reports around the rent cap. This has been a long and rumbling story over many years, the cost of living in Berlin and the legality of measures imposed to deal with that. Coming up later on the programme, we'll be back to the bank earning theme. There's the Deutsche Wohnen share price for you. We'll be speaking to the CEO of Bank of America, Brian Moynihan. That conversation at 10 p.m. London time. We will be sure to bring you all of the highlights tomorrow morning if 10 p.m. is a little bit late for you. Coming up, we'll talk about emissions. This is Bloomberg.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric.
Last year, Norway became the first country in the world to sell more electric cars than any other.
In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. Half an hour into a trading session that's broadly positive for European equity markets. US futures have been turning more positive, or they were during the last hour of trading, and they've continued to do so. In fact, NASDAQ futures now up by 0.6%. So we'll look stateside for further gains. Let's have a look at the GRR function then on the Stock 600. So the group rank returns tells us the sector breakdown of what we're seeing here on European equity markets. We've got consumer products and insurance to the downside. So there are a few sectors in the red. Interesting to see real estate to the upside, and that links very nicely with what we were talking about on Deutsche Wohnen. So over in Germany, we certainly have a rally in some of the real estate stocks there on the basis of some reports that are coming out of Germany that suggest that Berlin's rent cap may be ruled unconstitutional. So we'll keep an eye on that. That certainly sent the Deutsche Wohnen share price a little bit higher just minutes ago. So that is the biggest gaining sector here in Europe. We will keep that in focus. Let's turn our attention to the energy space now. When BP announced its energy transition strategy last year, not only did it pledge to become a net zero company by 2050, it also promised to help the world get to net zero. But Bloomberg Green has found that BP's climate ambitions may actually be counterproductive for the planet. In 2019, the oil major sold its Alaska unit to privately held Hillcore for $5.6 billion. Even though the emissions will be erased from BP's ledgers, of course, they have hardly vanished from the atmosphere. In fact, the opposite is true. Even as total US crude output plunged in the middle of the COVID-19 pandemic, US data suggests that production from the Hillcore unit that took over has already increased from 2019 levels by 4.7%. Joining us now to take a deep dive into this story is Bloomberg's oil and gas reporter, companies reporter, Laura Hurst. Laura, good to speak to you. Let's backtrack slightly. We focused here on BP, but there have been many, of course, oil majors that have been trying to turn themselves into something else, energy businesses, reorientate themselves more towards renewables and the like. So remind us, let's take a step back. Why did BP decide to sell these assets in Alaska to Hillcore?
Yes, well, the initial reason was because they were trying to reduce the debt. And what came later were these climate plans in which they want to massively bring down their carbon emissions, and what they now say is to become a net zero energy company. And what that essentially means is they're going to sell lots of oil and gas assets, which means that they, as a company, are no longer producing these emissions. But of course, the buyer will be. So, as you say, they go off the ledgers of BP, but onto another company. So it's not really a net positive for the world.
Right, indeed. So they leave the sort of public, more scrutinized, more transparent sphere, perhaps, and end up with private businesses. What do we know about the companies buying these assets then? So the assets that the publicly quoted energy businesses don't want to hold anymore, they sell them to private businesses. And what do we know about the way that these private enterprises run?
Well, we just know a lot less. If you look at BP and other oil majors, they produce these sustainability reports every year, and they'll say what they're doing with emissions, how much carbon dioxide is going up into the air from their emissions. But we're not getting that level of detail from private companies, and that's part of the problem. it means we're sort of more blind now as to what these assets are doing. And we're seeing a lot of that happen, not just in Alaska, but also in the North Sea, for example, where the oil majors have retreated and private companies backed by private equity have come in. And we just don't know as much about their emissions.
As I mentioned, yeah, so Bloomberg Green doing this deep dive then into BP and the asset sale in Alaska to Hillcore, but this is just one illustrative example of what is happening elsewhere in the energy space as well. This isn't a strategy limited to BP, is it, selling off these kinds of assets?
No, not at all. They're not the only ones doing this. And in fact, Shell, last month, they produced their own sustainability report, and they too said their emissions went down last year, but one of the reasons, apart from COVID, of course, was the impact of selling assets. And ironically, the CEO of Shell earlier this week said divesting oil and gas is a simplistic narrative. It won't change anything for the planet.
Yeah, well, what are investors saying about this then? Because in a sense, I suppose, Laura, investors have got what they were asking for. Lots of investors say, look at the influence we have had on the listed energy businesses. We've managed to make them take climate change more seriously, and they're divesting assets as a result. Is that the overriding thought process, I suppose, from the investment community?
Well, it's quite a mixed bag, to be honest. You know, you have some investors who are saying, well, there's no point. Why not just bleed these assets and keep them within listed companies, and that way they're sort of in the public domain? Whereas others are saying, no, we need to just turn the taps off, leave the oil into the ground, or get rid of them. So it's a little bit of a mixed bag, but no one seems to have the right answer, so to speak.
Yeah, indeed. So certainly something to watch. Laura, thank you very much. Bloomberg's oil and gas companies reporter, Laura Hurst. That really interesting deep dive into, in this case, BP and Hillcore, but the story is broader, as Laura is saying, conducted by Bloomberg Green. Plenty more on that available on our website. Let's just get back to that story we mentioned just some 10 minutes ago. We'd seen reports from Berlin that the rent cap was going to be overturned by a German constitutional court, and indeed that has come to pass. We now have that red headline across the Bloomberg confirming Berlin rent cap law overturned by the German Constitutional Court, and that has had an immediate impact. We saw it had 10 minutes ago an immediate impact on Deutsche Wohnen, and it sort of spread through the sector. So that particular share price now up by more than 5%, more than 5.5%. In fact, we also have Vonovia in that space up by 1.87%. We keep an eye on Adler and Aroundtown with that headline in mind as well. Let's get a Bloomberg Business Flash then. Some of the other top corporate stories that we're covering this morning. Here's Laura Wright.
Thanks, Anna. The world's #1 maker of advanced chips is boosting its spending and revenue growth targets. That's as companies from car makers to PC suppliers scramble to get their hands on, yes, semiconductors. TSMC says auto firms can expect chip shortages to begin easing next quarter, but overall supply issues are likely to last all year. Coinbase's debut on the Nasdaq saw the cryptocurrency exchange soar to a $112 billion valuation. Before slipping back slightly, the massive market cap dwarfs more traditional exchanges. Even the Nasdaq itself, it ended the session with a valuation of about $86 billion. Job openings in London's finance industry grew 70% in the first 3 months of the year. The big increase is due to such a low baseline after a year of uncertainty over Brexit and the pandemic. According to recruitment firm Morgan McKinley, people changing jobs can, on average, expect an 18% salary boost. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Coming up on the programme, sources expect new sanctions for Russia after alleged election interference and involvement in the SolarWinds hack. We'll have the details of the tensions between the US and Russia right now and the potential for a meeting. Also, this is Bloomberg.
is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What people call cryptocurrencies, they're really vehicles for speculation. No one is using them for payments, for example, like the dollar. What they're using them for is to speculate. It's a little bit like gold.
Expect tremendous volatility in this. It's going to be unstable in terms of investors and analysts understanding what Coinbase actually is.
I believe that most of the people who are most deeply invested in this company and in this economy, in this new crypto economy, are really long-term thinkers about what's going to be possible. And I think this is going to be a really interesting one for decades to come.
This was clearly a very successful direct listing. A lot of investor enthusiasm. It was a watershed day for Coinbase and for crypto in general. So I think when you look at the price action, there really is just a tremendous amount of enthusiasm.
Some reactions there to the Coinbase mega listing on the NASDAQ yesterday. Really fascinating story to watch. Certainly generated a lot of enthusiasm in Bitcoin and, as Mark was telling us last hour, in the Ethereum prices, and a lot of focus on the sector as a whole. We are now 41 minutes into our European trading day, and this is the picture for you. European stocks to the upside, up by 0.4%. Let's take a quick look at a couple of the other things that we're watching out for today. We've talked a lot about US banks. Earnings season continues for the big US banks. Bank of America is up first today at 11:45 a.m. UK time, and Citigroup reports at 1 p.m. UK time. Then US Treasury Secretary Janet Yellen will deliver her semi-annual foreign exchange manipulator report. Keep that in mind. Sources say she plans to spare China from labeling it a currency manipulator. Also happening today, UniCredit's new CEO, Andrea Orcel, takes the helm at Italy's second largest lender. He's been out of big-time banking for 2 years after Santander reversed course on installing him as their CEO. He's now seeking compensation from Spain's #1 lender in a legal feud. Bloomberg's Danny Berger takes a look at how things unfolded.
The team that I have built over the last few years will really gain from Andrea's experience.
Experience running UBS's famed investment bank. That's what Santander wanted to get a hold of when it offered Andrea Orcel the CEO job back in 2018.
He is very, very good at managing across cultures. And very importantly, he has a proven track record.
So Orcel quit UBS. Leaving for a competitor also meant leaving nearly $60 million in deferred pay on the table in Switzerland. When that number hit the headlines, the sum proved a little rich for Santander, and they dropped him as CEO. From star banker to unemployed, Orcel is now suing Santander for $133 million. Some UBS compensation is still being discussed, though that bank's chairman has made his position pretty clear.
We have a very clear policy. It can be summarized in 2 words. It's leave loose. I wish him luck. He's a great executive.
Orchel may find his luck on the other side of the Alps. He's been offered the top job at UniCredit, but will he find his fortune in Spanish court? In his own words, Orchel is not a man to let go.
Not a man to let go, he says. Danny Berger on Andrea Orchel's path to the UniCredit CEO job, which he starts today. Let's get a Bloomberg First Red News update then. Some of the other top stories we're covering this morning. Here's Laura.
Thanks, Anna. The European Union is still exporting more vaccines than it's giving to its own population. That includes nearly 40 million doses shipped to Japan and around 15 million to the UK. According to the Commission, the bloc has now given around 100 million shots. The EU is still working toward its goal of vaccinating 70% of adults by the end of summer.
The vaccination certificate should be ready, the final proposal, by June. I think it's important for citizens to feel that they have this level of predictability, that we can open up economies and travel safely.
Japan is joining the US in urging China to accelerate its efforts to reduce greenhouse gas emissions. It comes as Washington's envoy John Kerry is visiting China to discuss raising global climate ambitions.
We are calling on China to move ahead of its 2060 carbon neutral pledge and to urgently peak out their emissions. It is important for the democratic countries to have one voice to encourage China to be more proactive.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura writes here in London. So the US is readying sanctions against Russia that could target about a dozen people. Sources say it's also expected to expel up to 10 officials and diplomats. The move comes as President Biden grapples with alleged election interference and the now infamous SolarWinds hack. Financial penalties will be also levied across Russian entities, with bonds tipped as the next sanction target. Joining us now then is Bloomberg's Rosalind Matheson. Ros, very good to speak to you. So which are the Russian institutions that the Biden administration wants to target with these new sanctions?
Well, it's potentially quite a broad move, as our exclusive from last night's show. So you have about a dozen individuals, both government officials and intelligence officers, and around 20 entities, as well as a move expected to expel some Russian diplomats. One focus is likely to be on those who are blamed by the US for helping facilitate what is known as the Internet Research Agency. That's a Kremlin-linked troll farm that coordinated an operation on social media in a bid to help Donald Trump's presidential campaign in 2016. And another focus is expected to be on the entities who are linked to Russia's security services, which would be a specific response to the SolarWinds hack. So what you've got is quite a broad move across both government officials, intelligence officers, and state-linked entities in particular.
Yeah, and how is this going to go down then, Rosie, in Moscow after President Biden offered to meet with Vladimir Putin for a summit? In fact, we saw a rally in the Russian currency on the back of that meeting, because there had been a suggestion that, you know, maybe the meeting would allow the two sides to sort of work through some of these differences.
Well, that's right. So it looks a bit to be a choreographed move, because there are a number of moving parts here. You've got US concern about Russia's actions with Ukraine of late. You've got US concern about the imprisonment of opposition leader Alexei Navalny and the need to respond to SolarWinds. So the White House was clearly keen to de-escalate things first on Ukraine. And so you see Biden getting out on that with a phone call and the offer of a summit. It appears during that call he probably flagged that the SolarWinds retaliation, which of course the US has been considering for months and was well flagged, would follow. So it's like a 1-2 move. You get the good news in, and then you follow with the bad. Because for Putin, the real prize here is that summit. That's what he wants in person, and that's probably what he'll keep focused on.
And SolarWinds, of course, we may remember was a hack attack. And what is going to be the punishment for non-state Russian actors here then, Ros? Is there a suggestion that they are also going to be caught up in these new sanctions?
Well, most of them are linked in some fashion back to the state, even if they are Russian companies. And of course, many Russian companies are already heavily sanctioned by the US in some fashion. The big one, of course, is how it plays out for Russian debt, which affects the financial system. And it's why you're seeing that reaction today in the ruble, because what we're hearing is that there are other measures planned by the Biden administration, although it's unclear when they might be announced and if they're actually even fully signed off on as yet, as in has Biden given the green light. But those would seek to buy US financial institutions from trading new debt issued by the Russian Central Bank, by the Finance Ministry and the Sovereign Wealth Fund. So that's where you're going to see the impact potentially across the Russian economy, and that's really the thing that's going to concern the market.
Ros, thanks very much. Rosalind Matheson, our executive editor for International Government. Thanks to Ros for joining us. Apologies for some interference on the line, but important geopolitical story to get across this morning. Coming up on the programme, big banks to Bitcoin keep market watchers busy. We'll get the latest with Bloomberg's Markets Live macro strategist, Laura Cooper. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We're going into a period of faster growth and higher job creation. The main risk is that we'll have another spike in cases, perhaps in one of the virus strains. Over time and in the longer run, the U.S. federal budget is on an unsustainable path, meaning simply that the debt is growing meaningfully faster than the economy. It's a different thing to say that the current level of the debt is unsustainable. It's not. The current level of the debt is very sustainable, and there's no question of our ability to service and issue that debt. Most members of the committee did not see raising interest rates until 2024, but that isn't a committee forecast. It isn't something we vote on or act on as a group. It really is just our own assessment.
Fed Chair Jay Powell there saying the central bank will likely scale back its bond purchases before considering raising interest rates, so giving us some sense of the order of things, the order in which those tasks will be completed. 53 minutes into our European equity trading day, and we have some modest gains coming through for European equity markets. Laura Cooper, Bloomberg's MLive macro strategist, joins me on set this morning here in London. Laura, good morning. Something a little quieter, it seems, in markets. Did we learn much from Jay Powell last night? He was talking about that inflection point again. Some of the lines we've heard before. We've heard a lot from the Fed in recent days.
Well, and the comments that he did have yesterday really just repeated what we heard over the weekend from him. Yes, we're going to see that inflection point in the U.S. economy with strong growth, with job gains beginning to gain further momentum. But I think what's most interesting is the fact that we are starting to see these policymakers lay out a roadmap in terms of that tapering timeline. So yes, we already know that tapering is going to come ahead well before the first rate hike, but it's a question for markets of when. So now that we are seeing those vaccine rollouts, we're going to see quite robust U.S. data. It's likely that we could start to see signals from the Fed, likely later this year, that yes, they're going to have to pare back on that exceptional stimulus. Quite challenging when the balance sheet is almost 40% of GDP, almost double from where it was a year ago.
And so, yes, and so with that in mind, it is really important to try and understand how these central banks plan to taper without causing the tensions that we've seen in the past.
And that's the key that's the key question for many macro watchers right now, is how are central banks going to withdraw this exceptional monetary support without spooking the kind of tantrum like we saw back in 2013. So we are already seeing some central bankers tilt towards that direction. The Bank of England next month is likely to hint that they're going to start paring back on those purchases. And that's because of just these robust growth backdrops. And really, it's a question of how they can manage that balancing act of expectations.
Meanwhile, crypto keeps us busy, doesn't it? And the Coinbase IPO certainly putting a lot of focus on crypto. One of our colleagues saying, you know, this really managed to capture three real booming sectors. One is the enthusiasm for cryptocurrencies, one is stock listings, and the other is retail investor enthusiasm. This really hit the market at a sweet spot, although we did see volatility, of course, on day one.
And I think volatility is something that we're going to continue to see going forward. So I think the fact that we are seeing Coinbase become on this exchange certainly does bring cryptocurrencies to a step further in terms of legitimization. But as we know, with Bitcoin prices exceptionally volatile, when we look at these Coinbase profits, their user base, that's all tied to the crypto space. So if we do start to see bouts of volatility there, I think it'll be quite interesting. But again, we're going to potentially see even further regulation. We're going to see competition. So this really is a space to watch going forward.
Yeah, warnings that even the company themselves talked about and voiced yesterday. Thanks very much, Laura. Thanks for joining us here on set, here in London. Laura Cooper, Bloomberg's Markets Live macro strategist. That is it for the European Market Open. Surveillance early edition is up next. European equity markets then making some modest gains this morning as we head closer to the US session. Of course, European equity markets are to the upside. Stocks Europe up by some 0.4% or so. US equity market futures point to the upside. We had quite a light data calendar today. We do have retail sales coming out in the run-up to that. NASDAQ futures pointing to the upside by 0.6%. We will see where that retail sales number takes us after CPI earlier this week. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
We expect tremendous volatility in terms of investors and analysts understanding what Coinbase actually is.
What people call cryptocurrencies, they're really vehicles for speculation.
My prediction would be in the next 12 to 18 months, we're going to hit $100,000 per Bitcoin.
This is Bloomberg Surveillance, early edition.
A landmark listing, Coinbase soars above $112 billion valuation on its debut before tumbling 14% below its opening price. Kraken and BlockFi may be the next to test appetite. Taper first to raise later, Jerome Powell sketches the Federal Reserve's exit strategy in an interview with David Rubenstein. More from that conversation throughout the program. And Wall Street's banks earnings, well, they start with a bang. Investment banking boosts JP Morgan, Wells Fargo, and Goldman Sachs. Attention now turns to Bank of America and Citi. Good morning, and welcome to Bloomberg Surveillance Early Edition. I'm Yusuf Ghamedin in Dubai, alongside Matt Miller in Berlin. Matt, I have to say I was expecting a little bit more from the Fed chair. It was slim picking, to say the least.
Yeah, absolutely slim. Although I thought Rubenstein did a great job of getting some sequencing out of him, at least the lay of the land in terms of how the Fed is considering going about a taper. And we're starting to hear about tapering plans from a number of central banks, the ECB included. I was, however, then distracted, Yusuf, by the Coinbase direct listing. It was pretty frenzied, trading all the way up to $430 a share, or about $112 billion, and then dropped like a stone back down to $325. It'll be fascinating to see what it does today.
Yeah, nothing short of remarkable. But again, it gave back a little bit of the initial momentum. And the fact that we got the Fed chair to even remotely comment on Bitcoin, I mean, that was an achievement in itself. I'll give you that.
Yeah, absolutely. Let's get to the Fed chair. Jay Powell told David Rubenstein the Fed will likely scale back its bond purchases before considering raising rates.
We're going into a period of faster growth and higher job creation. The main risk is that we'll have another spike in cases, perhaps in one of the virus strains. Over time and in the longer run, the U.S. federal budget is on an unsustainable path, meaning simply that the debt is growing meaningfully faster than the economy. It's a different thing to say that the current level of the debt is unsustainable. It's not. The current level of the debt is very sustainable, and there's no question of our ability to service and issue that debt. Most members of the committee did not see raising interest rates until 2024, but that isn't a committee forecast. It isn't something we vote on or act on as a group. It really is just our own assessment.
Another comment that stood out from that conversation was when Powell called cryptocurrencies vehicles for speculation. The Fed chair's comments came as Coinbase made its NASDAQ debut. As we said, the direct listing saw the biggest U.S. cryptocurrency exchange in the world set off a frenzy in demand for all things crypto. In the end, though, Coinbase shares traded down 14% below the opening price. They came out, I believe, just about $381, and currently we're looking at the shares. Well, they closed yesterday at $328.28, and we'll see them open, of course, in New York hours from now. Here you see the pre-market trade, 361.80. So getting a little bit of a bounce back. Cathie Wood, for example, jumped in yesterday and bought, I think, $250 million of Coinbase shares for her ARK ETF. Let's talk, though, about all things Fed. Joining us now for that is Luke Hickmore, Aberdeen Standard Investments Investment Director. Luke, what did you think of Rubenstein's conversation with Powell yesterday? Is the sequencing news to you?
I guess not. We're seeing Powell pull his 2013 playbook off the shelf, right? And you think he joined the Federal Reserve System in 2012. He was instrumental in the whole taper discussion around the Fed as we went into 2013. So this is like, going back round again. Hopefully he's learned, and I think he has from his comments, and that's the important thing, that, a sudden taper, a selling of securities is not going to work. And that was one of the important things, I think, in his chat was, we don't know yet how we're going to reduce the balance sheet, but it's not going to be by selling securities. I think that's an important message for the market to take forward, Matt.
I mean, it almost looked like he was trying to soften the potential taper in the future message. Luke, at the same time, he also shared some views on the listing of Coinbase, the vicinity of $100 billion in market cap at the moment, pretty much neck on neck with some of the biggest companies on the S&P 500. What conclusions do you draw from that you could perhaps translate into some recommendations?
Well, first of all, I think Jay Powell hasn't got any Bitcoin. If you do have any Bitcoin, you tend to have a very different view of this, I think. That something like Coinbase listing on the market is a big, big event. And, knowing how many Bitcoins are being traded on exchange and how many are being withdrawn from the exchange can be really important in terms of the future direction for Bitcoin as well. And we've seen a lot of people take out coins from exchanges recently, suggesting they're long-term savers. And I think that's the important point that a lot of people are missing at the Fed here, that people are using Bitcoin as a savings vehicle as well as a speculation vehicle. I think that's important. As far as treasuries are concerned, I'm not sure this changes anybody's recommendation for treasuries. We've run up on inflation concerns. We've come back a little bit from that as the market has moved on a little bit from inflation. But at 160, 165 kind of area, perhaps they're starting to look a little bit more valuable if you believe in our second half thesis that the economy is not in an inflationary bubble, and that's a systemically changed position. If we're right about that, then actually we could be starting to see some value come back in that market.
In terms of savings, though, you're not getting a great return there, obviously, especially if you take out inflation. Real rates are still very negative. Gold has been seeing a lot of outflows, although it's trading up today to 1744. Just thinking about your point, Luke, in terms of taking Bitcoin off the exchange, putting them in cold storage, and then under my mattress, where else would you save money right now if you thought the market valuations were a little bit too frothy and you wanted to take some profits?
Well, I think this is exactly the point, isn't it, Matt? Where do people save? Sure, there's plenty of, 1 year, 2 year fixed rate savings products around. I think that's very difficult. They're not very high in terms of interest rates. Clearly, there are plenty of funds around in the fixed income universe with yields anywhere between 1% for low risk to 4 or 5% for high risk. But again, that's a very different thing. That's a volatile capital whilst you're still getting your income from it. So I think the choices for savers remain difficult. And it's why just now you can see them creeping into Bitcoin. And I don't know about you, but the conversations you have with people, they're either vehemently against Bitcoin or they're thinking hard about it or they own it already. And I think that's really quite an interesting move as people develop their views.
Yeah, it seems like more and more people have been won over. Every time we see a crash and then reflation in Bitcoin, more people come on side. Luke Hickmore is going to stay with us for a little bit longer from Aberdeen Standard Investments. We're also going to talk about earnings. It's another big day for the financials. They almost got overshadowed by the Coinbase IPO. Remember, we had Goldman Sachs and JP Morgan yesterday. Today, Bank of America, Citi, and BlackRock come out. We'll hear from our interviews as well with Wells Fargo CFO yesterday. This is Bloomberg.
We're early on in this year. I know we've already sort of penciled in 6 or 7% growth and a big fall in unemployment, but under outcome-based policy, we really want to see that.
I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
There's no textbook for this. You don't want to be too preemptive, but I also don't want to be so reactive that we're late.
I think it's too early to talk about changing monetary policy while we're still in the pandemic tunnel.
The consumer's in a really strong position, and that's a good thing, right, for the overall country and the economy. You know, they have liquidity strong. They have more money in their deposit balances than they did pre-pandemic, and that is impacting in the short run, loan balances. You know, you're seeing prepayment levels in the credit card business that are high. You're seeing less need to borrow money, both on the consumer side, but also the corporate side. But as the economy starts to gain more momentum and you start to see a little bit more normalcy in life, and people get out there more, I think you're going to see more demand in an environment like that for credit.
The Wells Fargo CFO, Mike Santomassimo, they're speaking about the health of the U.S. consumer. 3 down, more to come. JP Morgan, Goldman Sachs, and Wells Fargo reported earnings yesterday, beating estimates thanks to a boom in investment banking. Next are Bank of America and Citi before the U.S. opened today. And it's not just banks that are benefiting from the new environment for trade. The morning TSMC figures, well, they saw profits jump almost 20% as the shortage of chips globally keeps prices at a premium. Luke Hickmore of Aberdeen Standard Investments is still with the program. Luke, what caught my eye are the bank loans. I mean, for JP Morgan, down about 4%. That arguably could bode well for the economy. Does it bode well for banks going forward?
I think we have a couple of quarters. If you've got a large consumer business like Citi, that we'll see this afternoon, if you've got a large consumer business, you're going to have a couple of quarters of actually pretty soft numbers. You know, as you say, credit card balances are down, savings are up. That's great. That's funding some of your deposit funding. That's helpful. But you're not getting a chance to on-lend it either. So, you know, JP showed us a good global diversified bank really works in this environment, particularly one with strong risk controls. JP Morgan came out very well, as did Goldman Sachs. Citi, I think, will be interesting. But it does set up, Yusuf, I agree, it does set up a really nice recovery as the banks are able to lend into a consumer recovery as we go through later in the year. And it's going to be important to watch that because clearly it could be inflationary. We don't think it's going to be a long-term inflation problem, but we're going to be talking about that, I think, for the rest of the year.
It certainly sets up, well, they can release a lot more reserves if it continues like this, that's for sure. But that's not a strategy long-term, right? Loan demand has to come back. I think Yusuf makes a great point. And the question is, will it, Luke? I mean, are companies and consumers going to be demanding loans going forward? They certainly weren't in the last quarter.
Well, you usually get to the point of needing a loan when you've used all your savings and there's still big important things to go, or you want to think about leverage perhaps, which is tricky for a consumer maybe. So at some point, yes, we will see loan growth pick up, whether that's commercial or whether that's exactly, or if it's consumer. Yeah, it's right. They may be building their office at the bottom of the garden as we all work from home and getting that funded. So big purchases. And those big purchases happen when people are more confident about the world. And we are seeing those confidence numbers rise. So I wouldn't write loans off at all. I wouldn't write credit cards off at all. But as I say, it may be a couple of quarters of soft numbers for those areas, I think, as we go through 2021. But ultimately, it's not really going to impact the bank's capital, which is what I'm interested in as a credit investor, and it's why we're still overweight that area of the market, and I think will remain so as we go through this year and next year at least.
Luke, if we see a relative stabilization in some of these bond yields, is that going to offer a little bit of respite, sufficient respite for some of these growth plays? I want to know from you what you're telling clients about exposure to names outside of banks.
So, yeah, more selective, really. I think, again, from a credit perspective, Yusuf, rather than an equity one, I'm afraid. But from a credit perspective, this is a great environment. You know, we've seen companies increase their savings like consumers. You know, there are particular areas of the market that are going to benefit massively as we come out of the lockdowns that we've been in. So we've been buying airports. We've been in airlines and are now out of airlines. We've been buying cruise lines. We've been buying people like, fun fare operators. So I think that there's lots there to pick from at the moment that you can think, you know, there's great value in these companies. They haven't been fully recovered yet.
When can we get back to a Rugby Sevens tournament? When are we going to get back out there, Luke?
Oh, Matt, that would be great. That would be great, wouldn't it? I think we've got a reduced Rugby Sevens tournament list this year, but I think that's going to realistically be next year. We're hearing about the Tokyo Olympics is at risk just in the last couple of days, right?
Yeah, absolutely. But we could see the Hong Kong tournament come back in 2022. Luke Hickmore, thanks very much for joining us. Aberdeen Standard Investments Director, talking to us about a whole range of assets from a credit perspective. Let's get the Bloomberg First Word News now. For that, we go to Leanne Gerrans in London. Leanne?
Good morning, Matt. Sources say the US is set to impose sanctions on Russia. That is for alleged involvement in the SolarWinds hack and efforts to disrupt the US election. The moves could be announced as soon as today, and we are told they include sanctions on about a dozen people and roughly 20 entities. Now, the European Union is still exporting more vaccines than it is giving to its own population. That includes nearly 40 million doses shipped to Japan and around 15 million here to the UK. According to the Commission, the bloc has now given around 100 million jabs to its citizens. The EU is still working towards its goal of vaccinating 70% of adults by the end of the summer.
The vaccination certificate should be ready, the final proposal, by June. I think it's important for citizens to feel that they have this level of predictability, that we can open up economies and travel safely.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Youssef.
Thank you very much for that, Leanne. Let's get now to a bit of a preview on what is coming up. First day in the office, the new UniCredit CEO, Andrea Orcel, reportedly wins a shareholder vote on his 7.5 million euro play package. We'll talk about the Italian bank next. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The team that I have built over the last few years will really gain from Andrea's experience.
Experience running UBS's famed investment bank. That's what Santander wanted to get a hold of when it offered Andrea Orcel the CEO job back in 2018.
He is very, very good at managing across cultures. And very importantly, he has a proven track record.
So Orcel quit UBS. Leaving for a competitor also meant leaving nearly $60 million in deferred pay on the table in Switzerland. When that number hit the headlines, the sum proved a little rich for Santander, and they dropped him as CEO. From star banker to unemployed, Orchel is now suing Santander for $133 million. Some UBS compensation is still being discussed, though that bank's chairman has made his position pretty clear.
We have a very clear policy. It can be summarized in 2 words. It's leave loose. I wish him luck. He's a great executive.
Orchel may find his luck on the other side of the Alps. He's been offered the top job at UniCredit, but will he find his fortune in Spanish court? In his own words, Orchel is not a man to let go.
Not a man to let go. Danny Berger on Andrea Orcel's path to the UniCredit CEO job, and of course, focused really on the big money that he stands to lose. Let's get over to Elisa Martinuzzi. She is a Bloomberg opinion writer focused on the finance industry, and she wrote that Orcel is a master deal maker, but that that the challenges of running UniCredit are unique. She also pointed out that the blockbuster mergers he's negotiated on behalf of clients earned him the moniker of the Cristiano Ronaldo of bankers. Elisa is joining us now. So, Elisa, what's so special about running UniCredit? What's unique about UniCredit compared to other banks?
Well, he takes over a time in which, the bank is among one of the cheapest in Europe at the moment, penalized by a number of factors. Investors are concerned about the political influence that may be weighing in on management decisions, given the arrival not just of Orchel this month, but also of a new chairman. The new chairman, Carlos Padoan, of course, a former finance minister, raising concern that the company is going to be run perhaps with more political interest than shareholder interest in the future. That's weighing on the price, but so is, the profitability that the bank faces, particularly given its focus on the Italian market, where it now is no longer the market leader. It's behind Intesa, which has grown more significant in size over recent years. So a few challenges, and the first one being the fact that the Italian government is very keen to find a partner for Monte dei Paschi di Siena, which it still owns after a bailout several years ago, and the finger is pointing very much at UniCredit as the buyer.
Yeah. So the stock's been flat year to date, lagging the stock 600 banks index. I wonder how this Santander saga is going to affect Orcel's tenure.
Well, there's also that still weighing over his future. He is trying to redeem, to recover some money which he claims was due after Santander withdrew his offer. So there is potentially a trial that's going to be underway in the next few weeks. The last we heard from Spain was that the trial was postponed because of the judge needing to isolate because of COVID. But that could be, an immediate distraction for the CEO in the weeks ahead.
We're going to leave it there. Thank you very much. That is Elisa Martinuzzi there. Coming up, we're going to talk about BP's emissions because they're disappearing, but they're not quite going away. That's up next. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
A landmark listing, Coinbase soars above $112 billion on its debut, but then it tumbled 14% below its opening price. The stock is now back up a little bit in pre-market trading. Taper first, raise later. Jerome Powell sketches the Federal Reserve's exit strategy in an interview with David Rubenstein. We'll bring you the details. And Wall Street banks start earnings season with a bang. Investment banking boosts JP Morgan, Wells Fargo, and Goldman Sachs, but loan demand isn't growing. Attention turns to Bank America and Citi today. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin alongside Youssef Gamel Eldin in Dubai. And Youssef, you pointed out earlier, I think the key issue for the banks that we're watching, they're not seeing that growth in loan demand. Jamie Dimon complained about it yesterday with JP Morgan earnings. And as Luke Hickmore pointed out from Aberdeen Investments, as long as people have a pile of stored savings, they're not going to necessarily need to go out and borrow money without getting really attractive rates.
Absolutely. So JP Morgan and Wells Fargo both seeing a bit of a contraction then in some of the loan demand. And perhaps that's good news in that shows that people are able to manage their finances. It could be a prelude to a new wave of spending, but then it does raise questions for the banks themselves. Also, keep an eye out on the VIX, which is hovering around multi-week lows at about 17 as we prepare for the open in the U.S. In the meantime, let's get to BP, Matt, because they've announced the energy transition strategy last year. Not only did it pledge to become a net zero company by 2050, it also promised to help the world get to net zero. But Bloomberg Green has also found that BP's green ambitions may even be counterproductive. In 2019, for example, the oil major sold its Alaska unit to privately held Hilcorp for $5.6 billion. And even though the emissions from the unit will be erased from the BP's ledger, they have hardly vanished from the atmosphere. In fact, the opposite is true. Even as total U.S. crude production plunged in the middle of the COVID-19 pandemic, U.S. data suggests that production from Hilcorp unit has taken over, already increased from 2019 levels by 4.7%. Joining us now is Bloomberg's oil and gas companies reporter, Laura Hurst. Laura, I mean, how crucial then are these divestments in BP's net zero strategy?
Well, it's quite a big part of the plan, and in fact, in their sustainability report just published earlier last month, actually, they said one of the reasons that their emissions had gone down was, in addition to the impacts of the COVID pandemic, was the sale of assets. And what they're trying to do is eliminate their carbon emissions by the end of 2050, and sales of assets is going to be a key part of that.
What kind of oversight is there now for privately held oil companies like Hilcorp, Laura?
Well, a lot less oversight, which is what we're seeing now. So listed companies like BP every year will publish sustainability reports where they say this is how much greenhouse gas we're pumping out into the atmosphere, how much methane, etc. Whereas private companies like Hilcorp and like Ineos, which also bought some of BP's assets last year, they don't publish this level of detail, and they don't have to.
What are some of the wider lessons of the BP Hilcorp deal that can perhaps be applied to the wider industry?
Well, I suppose it sort of shows how there isn't a straightforward path to net zero, that simply divesting oil and gas assets is not actually going to remove emissions from the planet, as it doesn't really impact demand. If people are still buying and using oil and gas, then simply selling those assets isn't going to eliminate those emissions.
Laura, thanks very much. Laura Hurst there, Bloomberg's oil and gas companies reporter, talking to us about attempts to be clean and maybe not a huge amount of success in some cases. Let's get over to central banking. Fed Chair Jerome Powell says that the central bank will likely scale back its bond purchases before considering raising interest rates. He added that hikes would be highly unlikely before 2022, which is coming up very quickly. The comments solidify a timeline of the central bank's eventual exit from aggressive policy support.
We've said that we would expect to keep interest rates where they are today until three particular outcomes are achieved in the economy. The first is that the recovery in the labor market is effectively complete. The second is that inflation has reached 2%. And really reached it, not just sort of tapped the base, as I like to say, but has reached it sustainably. And the third thing is that inflation is on track to run moderately above 2% for some time. Those are the tests. So we are really focused on the progress of the economy toward those goals and not on a particular time frame. When we get those three boxes checked, that's when we'll consider raising interest rates, and that's when we'll raise interest rates. Until then, we won't. So what you're referring to, I think, is we all write down these projections every quarter in the March, June, September, and December FOMC meetings, write down individual projections, and we submit those, we tabulate them and publish them. And most members of the committee did not see raising interest rates until 2024, but that isn't a committee forecast. It isn't something we vote on or act on as a group. It really is just our own assessment. And so I think there's a tendency of markets to focus too much on what we call the dot plot, the summary of economic projections, and I would focus more on the outcomes that we've described and the best assessment we can make of our progress toward achieving those.
Okay, but based on what you know today, you would not expect to increase interest rates before 2022, or you're just not saying that yet?
Well, before 2022, that would be this year. I think that would be highly unlikely.
And that was the Fed Chair Jerome Powell speaking with David Rubenstein, the Carlyle Group co-chairman and co-founder of the virtual event hosted by the Economic Club of Washington. Still to come on the program, another big day for earnings in the financial space. We get figures from Bank of America, Citi, and BlackRock. We're going to break down what you need to know ahead of that. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America. BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin, alongside Youssef Gamel Eldin in Dubai. Now, 3 down and more to go. JP Morgan, Goldman Sachs, and Wells Fargo, as we've been telling you.
Morning, traders.
They beating estimates.
Hope you're okay today. Straight to the business. Bitcoin. New order. I'm going to place new order to sell Bitcoin. We already hold short position. Another position I'm looking to sell at 62,903. Okay, guys, if you want to trade Bitcoin, here is your chance, 62,903. To sell Bitcoin short and to make profit from falling Bitcoin. Okay, in this case, we'll hold 2 positions. And if you're already following our trades, and if you've got the strategy, you know exactly what to do. If you don't, you can get the strategy from company.co.uk, and where we explain everything, what to do, how to buy on margin, how to sell short, how to hedge your positions. So we never lose money. We never place stop loss. We always place stop on profit. All right. Okay. New position open on will be open probably because it started to move up. You still have time to place an order. I'm looking right now to euro, and it's look like. I'll check through my. Strategy pack, it tells that yes, we can place an order to buy euro. Okay, I'm looking to buy at 119.77.9. Okay, so I'm going to place also the order to buy euro at 119.77.9. So if you want to buy euro, if you want to trade euro, it doesn't really matter for day traders, they buying or they're selling short any pairs or equities, because we all looking to trade, to make profit from positions we hold. So if you want to trade euro, here is the chance. You can place an order at 119.77.9. Okay, guys, stay safe, and hopefully we will get filled soon on both this position. And I hope this day will bring us positive results from both trades. I'll speak to you later, guys.
It ended the session with a valuation of about $86 billion. And job openings in London's finance industry grew 70% in the first 3 months of the year. The big increase is due to such a low baseline after a year of uncertainty over Brexit and the pandemic. According to the recruitment firm Morgan McKinley, people changing jobs can, on average, expect an 18% salary boost. And that's your Bloomberg Business Flash. Matt.
Leanne Gerrans, thanks very much for that. Now to the latest on vaccines. European Union Health Commissioner Stella Kyriakides said the bloc is still working towards a goal of vaccinating 70% of adults by the end of summer. She spoke with Bloomberg's Maria Tadeo.
This will make a total amount of 250 million doses in the second quarter from BioNTech Pfizer. So we are moving quickly with our vaccination strategy. And we aim that we will continue to have vaccinations picking up.
When you look at this new vaccines that are coming in and the delivery is going to be accelerated, that means that your goal for herd immunity, and that's September 21st, that is still doable and you're still hoping for that.
We had announced the 70% target full vaccination of the adult population by the end of summer. And in our communication that we had issued on United We Can Beat COVID-19, we are working towards that with the member states. Of course, it depends on the deliveries and the rollouts, but we are working towards that to achieve that target.
I am curious to know whether this contract that you've announced today with Pfizer, is that a response to Johnson & Johnson? Was that something that you were working on, or are the two separate?
I would say that it's part of our general vaccination strategy to have and secure the largest amount of vaccine for European citizens as quickly as possible. In terms of Johnson & Johnson, as you know, the company decided to withhold temporarily the deliveries in the EU. For us, safety of vaccines has always been a cornerstone of our vaccine strategy. And we follow a science-based approach, so we're waiting to see how this develops.
You're confident overall, and given the numbers that we were seeing before Johnson & Johnson, that actually the national component of this is actually quite well set up to some extent.
I would say that what we're seeing now is vaccination rollouts have been picking up, and in Q2 we expect this to continue. We really need to be very focused and work closely with all member states in order to ensure that citizens are vaccinated as quickly as possible, especially in view of the situation we have with the variants.
And just as a final question, today there's also, as you know, a debate around the vaccination certificate. Do you foresee which vaccines are going to be included in that? And is it even, I guess that's the question, a good idea to travel over the summer?
The vaccination certificate should be ready, the final proposal by June. I think it's important for citizens to feel that they have this level of predictability, that we can open up economies and travel safely.
Fascinating conversation there with the European Union Health Commissioner Stella Kyriakides, speaking with Bloomberg's Maria Tadeo. A quick check then on some of these moves that are taking place in Russia, where we have, of course, news around these sanctions, and we're going to get to that in a moment. At the moment, Russian stocks down 0.6%. You're seeing bond yields on your 10-year paper going up. The Russian ruble is down 1.2%, Matt.
Yeah, very interesting moves there, and we're going to hear what President Biden has to say very soon about sanctions. It's only days after the two leaders held a phone call. More on that story next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Okay, unfortunately, I got to cancel euro. As you can see, it moved up rapidly, so I need to cancel it and wait for other time. So if you want, well, yeah, tough luck. Let's cancel, and if you wanted to trade euro, stay with me, and there always will be new opportunity chances to trade euro. So stay with me, and I'll tell you when we're going to place new order to buy or sell euro. Like I said, if you want to get the strategy, you can get it from company.co.uk. We provide live support for live time, so if you will buy, it doesn't mean that we'll let you go. If you will struggle, if you will have a problems or questions, how to find out more information. I believe we gave all necessary information, but people are different. So if you'll have some more questions, we're always open for discussion to help you guys to achieve any results you want within your trading experience. Okay, stay safe. So the order was cancelled, and look like a Bitcoin, as I can see, it moved down as well, but we'll hold our order to sell short Bitcoin.
I mean, the take on this is that it's an inflection point for credit markets, not just in China, but potentially Asia as well. The ripple effects are going to be felt for a long, long time. We will keep a close eye on that.
All right, it looks like we've lost Youssef. I wasn't sure if we'd lost me, but I'm still here, so I'll pick up while we get him reconnected. Now, the U.S. is readying sanctions against Russia that could target about a dozen people. Sources say it's also expected to expel up to 10 officials and diplomats. The move comes as President Biden grapples with alleged election interference and the now infamous SolarWinds hack. Financial penalties will also be levied across Russian entities, with bonds tipped as the next sanction target. Joining us to discuss is Bloomberg's Derek Wallbank. So, Derek, you know, this has been a long time coming. Was it expected to hit now?
Yeah, I think it was expected to hit now, Matt. Joe Biden told Vladimir Putin that there were going to be some repercussions coming. So I don't think anyone should have been surprised that now we are seeing something. I think there was some market surprise, certainly over the bond aspect that you've mentioned. That, I think, took a couple people off guard. You've seen the market reaction to that. The rest of this stuff, I wasn't really taken aback by when Bloomberg broke the story that this sort of thing was coming, could be announced potentially today.
All right, so we fixed the line. I'm back, and I want to ask you something, Derek, about what it means for bilateral relations going forward.
Yeah, well, I'll tell you, I was actually struck by a little bit of moderation here. And the moderation I was struck by is actually not related to the sanctions per se, but to the news that the U.S. was not going to send 2 ships into the Black Sea. There had been a signal that Russia thought that that was going to be a little bit too provocative with all of the Ukraine tensions going on, and the U.S. pulled back from that. Additionally, in that same conversation with Biden and Putin, Biden said that he wanted to have a summit with his Russian counterpart. Now, that was at the same time that he said that, you know, there are going to be some heavier steps coming. And so those 2 moves together signal to me that the U.S. isn't necessarily looking to break things off and enter some ice age with Russia, but more that they felt like they needed to make a proportional response to the SolarWinds incident, to some of the election interference allegations that the U.S. has had going on, but doesn't want to ice the entire relationship entirely.
How does Crimea play into this? How do the tensions flaring up on the eastern border of Ukraine play into this, Derek?
I think they are an absolute potential risk because the U.S. has said steadfastly that it does not, it doesn't back what Russia's doing. Obviously, there have been sanctions related to that. There have been tensions related to that. If there is a deterioration in that situation with Russia vis-a-vis Ukraine, you can absolutely expect there to be pressure, not just from the White House, but domestic pressure in the United States and indeed in Western Europe to go and do a lot more, right? And so not only is it what is Biden going to do, but Biden will feel a little bit boxed in that he has to do more on the situation because he can't risk a deterioration there. So I do think that the tensions between Russia and Ukraine are a risk to that relationship going forward.
Derek, thank you for that. That's Bloomberg's Derek Wallbank, our senior editor in Singapore. Matt, one story that caught my attention in the last hour, it's one of the most read actually among our global audience, is around a top court striking down a rent freeze rule in Berlin. You live right there on the ground. How is that likely to be received, and does it affect you at all?
Well, I think, to be fair, my perspective is maybe a little skewed because many of the people that I know are property owners and have been fighting quite strongly against this. Until now, Berlin had decided that if you had an older apartment, the kind that many people seek out because of the higher ceilings, they could cap the rent. And now there's this high court is saying they cannot do that. Now, I happen to live in a newer apartment, and my rent has never been capped. It just shoots higher and higher and higher. And something I guess, I have to deal with. It's all down to supply and demand. That's how the free market works, right, Youssef?
We're going to have to put that on an index sometime. We're just a little bit higher on U.S. equity futures. Much more to come. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This year is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But it's very close to that. This is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. I'm not talking energy only, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
NEOM will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain NEOM on the back of a set of PowerPoints and a video clip. You just need to be here. You need to breathe it. And specifically the startup mode and things happening, buzzes all around you here.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We expect tremendous volatility in terms of investors and analysts understanding what Coinbase actually is.
What people call cryptocurrencies, they're really vehicles for speculation.
My prediction would be in the next 12 to 18 months, we're going to hit $100,000 per Bitcoin.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from New York and Berlin on this Thursday, April 15th. Our top stories today. Exit strategy. Fed Chairman Jerome Powell says the central bank will probably scale back bond purchases before raising interest rates, but don't expect that for a while. Make way for the professionals. Traders at Goldman and JP Morgan show the Reddit crowd how it's done. We'll hear today from Bank of America and Citigroup. And a rude awakening for Coinbase. The crypto exchange falls 14% in its debut, but it shows signs of a comeback in early trading today. I'm Kaylee Lines in New York with Matt Miller in Berlin. Francine Lacqua is off today. Matt, we are fresh off an insanely busy 24 hours, and we're set for another busy 24 hours. You have Coinbase's second day of trading, retail sales, more bank earnings, and then, of course, the market digesting the comments we got from Jerome Powell yesterday.
Yeah, and there's a lot going on outside of that as well. You got the Huarong issue in China, which could send ripples around the globe in terms of rates. And then you've got a number of more local stories. Here in Berlin, for example, the rent cap has been done away with. So a judge says go back to free markets. And over in London, if you're switching jobs right now, you can expect an 18% pay rise. So a lot of news out there for us to follow.
Yeah, so much we're going to try and pack into this hour for everyone. I want to get a quick check on the markets ahead of that. In the Asian session, equities were actually mostly higher, the exception being Hong Kong and Chinese stocks. The Hang Seng down about 0.4%, the CSI 300 by about 0.7%. The PBOC effectively draining all the medium-term liquidity out of the market. That is weighing on equities. And of course, in the credit market, continued pressure with concerns around the health of Huarong Asset Management. As you were just talking about, Matt, we're continuing to see Asian dollar bonds falling and spreads widening out for the 9th day in a row. As far as the FX market, I'm actually paying attention to the ruble because the U.S. Biden administration is reportedly poised to impose sanctions on Russia in retaliation for the SolarWinds hack and election meddling. The ruble is off session lows, but still weaker against the dollar by a little more than 1%. As for the picture in Europe, it is really green across the screen. We're up by about 0.25% on the stock 600, by about or actually about 0.4% right now, by about 0.5% on the FTSE 100 in the UK. In the bond market, not a lot of movement. We're down just about a basis point on the 10-year German bond yield, now sitting at negative 27 basis points. And in the foreign exchange market, I am keeping an eye on the Turkish lira. At 7 a.m. Eastern time, we're going to get the first decision out of the central bank since its new chief was instated last month. The lira right now stronger against the dollar, ahead of that by about 0.4%. As for the picture here in the U.S., we fell off of record highs yesterday for the S&P 500, but a little bit of a comeback in the futures market. S&P E-minis up almost 20 points. In the Treasury market, down 2 basis points on the 10-year yield. The market digesting that tapering talk outline exit strategy from Jerome Powell, sitting at 1.61%. Crude actually turning lower for the first day in 4. And then, of course, we have to look at Bitcoin. After that Coinbase debut yesterday, both Coinbase and Bitcoin fell. Bitcoin trying to crawl back, though it remains below its record high right now, sitting at $62,700 per crypto coin, Matt.
All right, so a lot of movement there indeed, and we're far off the record high. We were at $64,867, I think, yesterday, Kaylee, but we could see more movement today as Coinbase reopens. Let's look ahead to what else is going on today. Earnings continue for the big U.S. banks. Bank of America is up first at 6:45 a.m. New York time. That's followed by Citi coming out at 8 sharp. We get U.S. initial jobless claims and retail sales at 8:30, so a lot on the economic docket to look forward to. We do have an interview with the CEO of Bank of America, Brian Moynihan. That's at 5 p.m., an interview you don't want to miss. And what we've been seeing, Kaylee, with these bank earnings, at least the 3 big ones that we got yesterday, they knocked the cover off the ball in terms of beating expectations. But a lot of that is driven by releasing reserves, since we didn't see this cascading bankruptcy disaster that maybe they had expected. And they're not seeing the kind of loan growth that they would like to see. At least Jamie Dimon expressed that in his statement yesterday. So the question is, are American consumers and businesses going to need to go out and borrow more money as the economy reopens?
Well, and of course, Jamie Dimon tried to walk a little bit of that back on the call. He said it's actually a good thing that loan growth isn't something that's happening right now. It's a good sign for the economic recovery. So we'll have more on that in just a moment.
The economy.
Yeah, exactly.
Not great for
not
the bank,
so much
right?
for JP Morgan. Yes. But let's talk about Coinbase first. Closely watched direct listing that debuted yesterday. America's largest crypto exchange soared above a $112 billion valuation in its debut before slipping back. But it's staging a comeback this morning. Joining us now for more is Sonali Basak, Bloomberg Wall Street reporter. Sonali, just talk me through your reception of the volatility yesterday. What exactly happened?
Oh, as far as Coinbase goes, it's really interesting. A direct listing is known to be more volatile because you don't have the same functions you would have in an IPO that would really be stabilizing that price. With that said, where it ended the day, Kaylee, at about $328 or so per share, is less than where it was trading in private markets. So, you know, jury's out on whether it was a successful direct listing by that measure. But with that said, you know, initial investors still made a lot of money off of this deal. It's still a company that's worth almost $86 billion. And, you know, time will tell where it goes, but we knew from the beginning it would be volatile.
Right, and we saw Cathie Wood sweep in and pick up some shares at that lower price. Right now, the pre-market price is right down by your left arm, and we're seeing $366 a share. Sonali, talk to us also about bank earnings. As Kaylee pointed out, you know, Jamie Dimon says, hey, you know, not so much demand for loans. Great for the U.S. economy, but not so much for the bank. And JP Morgan was down yesterday for the 3rd day in a row.
Yeah, it was down more than 2%. And, you know, it's funny because Wells Fargo rose on the same vein because Wells Fargo had guided that the second half of the year should be an improving economy that should pick up loan demand. On the other hand, you had Jamie Dimon also guiding that with higher interest rates, some of the same forces that had people borrowing for things like mortgages might get tougher as the year goes on. Net interest income was guided to be the same where they had guided before, which is $55 billion in net interest income this year for JP Morgan. Bank of America, this will matter a lot for. I assume to hear a lot of the same from CEO Brian Moynihan on the improving consumer, really booming outlook on the second half of the year on the economy. Another question I have for Bank of America is what will reserve releases look like? That was more than $5 billion at JP Morgan. They said they could do less than $7 billion through the rest of the year. Of course, they still keep some money set aside. Reserve releases are great to see because of the improving economy. They are one-time issues here, so they're not going to continuously impact the bottom line.
Yeah, absolutely. They can't release reserves forever. But if you're sitting on $25 billion right now, you can do it for some amount of time. Sonali Basak, Bloomberg Wall Street reporter, wrapping up those two huge stories for us. And another one is in geopolitics. The Biden administration is said to be readying sanctions against Russian individuals and entities that we've been telling you. This is in retaliation for alleged misconduct, including the SolarWinds hack and, of course, the election meddling that's been a theme for already 5 years. Let's get more from Rosalind Matheson, Bloomberg executive editor for international government. Roz, what do we know about the sanctions planned?
Well, it's quite a broad move that is set to be announced as soon as today. About a dozen individuals, government officials and intelligence officers, around 20 entities, some linked to a Russian troll farm, as well as expelling some diplomats. And we're hearing there are other measures planned by the administration, though it's unclear when they might be announced and if they're actually fully signed off. And those would bar U.S. financial institutions from trading new debt issued by the Russian Central Bank and the Finance Ministry. But it does look like a very carefully telegraphed move. This retaliation was being considered for months. So before that, of course, Biden has called up Putin and offered to have a summit. So it's a bid to get him to de-escalate, but also sends the message he wants to look forward, not back. So these sanctions are really for the past. Let's get those done, and now let's move on and find a way to meet.
Yeah, and you have to wonder how the tensions on the eastern border with Ukraine are factoring into the administration's calculus here. Rosalind Matheson, Bloomberg executive editor for international government, thank you so much. I do want to get a check on some stocks moving in pre-market trading here in the U.S. now. Of course, we have to check on Coinbase for its second day of trading. Yesterday, it opened up at $381 a share, rose almost to $430, then fell back below the opening price. It is still below that, though it is up about 11% in pre-market trading at $366 or so a share. That's giving a lift to some other crypto-tied stocks like Bit Digital as well. And then in the vaccine space, we are seeing continued strength for CureVac. It's up 8%. Moderna, another vaccine maker, up by nearly 3%. The idea being the pause of the Johnson & Johnson vaccine is going to aid some of these other vaccine makers, and we're seeing that reflected in early hours action, Matt.
I'm excited. I'm going to interview the CureVac CEO tomorrow, which is really cool, especially since they're based in Tübingen, where I went to university, or where I was at least enrolled at university for a couple of years. Coming up next, Thanos Papasavvas joins us from ABP Invest. He is the Chief Investment Officer, and we've got so much to talk about with him, considering the geopolitical issues, the bank earnings, and the crypto mania. Later on today, back to bank earnings, we speak to the actual CEO of Bank America. Brian Moynihan joins us on his earnings and the U.S. economy at 5 p.m. New York time. That's 10 p.m. in London, so set your DVR. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday.
We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The economy at this point does seem to be at a bit of an inflection point, and that makes sense with ever more widespread vaccinations, with strong fiscal policy, with continued support for monetary policy. You see the economy opening. You can see ridership on airplanes going up and people going back to restaurants. I think the March jobs report that we recently got shows what that can look like.
Fed Chair Jerome Powell speaking with David Rubenstein yesterday at the Economic Club of Washington. Well, at least virtually at the Economic Club of Washington. You know, Kaylee, it was 8 years ago this month when the Fed chair, then just Federal Reserve governor, declared substantial progress towards the economic objectives and recommended a reduction in bond purchases. And following that in May at Jackson Hole, Ben Bernanke said taper. And I've got a great chart of what happened after that word left his mouth. It's 24:08 on the terminal for those of you who are tuned in on London DAB digital radio. I'll just say it goes from red to green real quick. And this is real rates. So they shot higher. It's difficult to say taper without a tantrum. And we're starting to hear more and more taper talk from central banks around the world. The ECB has a couple of members who were saying maybe in March of next year, and then one who said actually maybe in Q3 now. And yesterday you heard Jerome Powell at least laying out kind of the sequencing for David Rubenstein. Joining us to talk a little bit about what this means is Thanos Papasavas, ABP Invest founder and CIO. And Thanos, at some point, you know, as the economy recovers, they're going to have to change course. When do you expect that to be?
I agree with you. They will change course. But I think the markets were way ahead of themselves, thinking and expecting that over the last 3 minutes, Fed minutes, Jerome Powell would signal or shift towards a more hawkish stance. I think they will start shifting that trajectory in the early part of next year. Once we've had a strong Q3 and a strong Q4 working on all full cylinders, and we see not only the headline price of inflation, which is impacted by year-on-year factors, but the core components of inflation starting to pick up. That's when I think the Fed comes in and starts bringing the dots back in for a raise ride later next year.
All right, so that's really not that far off, Thanos. How do you want to be positioned ahead of that?
Well, we have been negative 10 years for quite some time. We expect that in the medium term, we see the yields continuing to rise. However, we think that it's unlikely to continue at this current speed. So we expect the trajectory of yields to slow down. It's about the speed, the concern of the speed, rather than the direction of play. And I also believe that the steepness that we have seen in the curve is also going to sort of take a pause. We've been expecting a steeper from 13 basis points back in 2019, and it reached 150. We thought that's enough. We turned back to neutral. don't get me wrong, Matt. I do see that the yield curve will continue to steepen towards 200, 250 basis points by the end of the cycle. But for now, I think a temporary pause is prudent. If yields do not sort of contain themselves, then I do expect the opposite of a tantrum. I see quantitative easing coming in and the Fed trying to contain markets in case they unruly disrupt the economic recovery.
Well, of course, Thanos, that a higher yield, steeper curve is part of the broader reflation trade. Do you then expect a pause in the other parts in the equity market for financials and energy, for example?
Well, it's interesting you say that, because I think that the valuation, the value versus growth story, the value story is more attractive for the medium term. I think there's still a significant opportunity for value versus growth. But in the very near term, we do see a little bit of a correction. So the growth stocks will probably gain back a little bit of that part which they lost versus value since over the last few months. So I do expect a little bit of a transition there. But more broadly, we do not get us wrong. We do believe in the reflationary story. We believe in the pro-growth story. And in fact, I believe that the fiscal measures will be in place a little bit longer. We're no longer interested in the key macroprudential measures within the developed economies. And there are opportunities here to address not only economic, but social and racial and political inequalities. So more fiscal stimulus for a longer period of time.
Well, and of course, then there's a line to be drawn from that fiscal stimulus to inflation. And then on the inflation front, a line to be drawn back to corporate earnings. At what point do you become concerned about pricing pressure and margin pressure?
I do believe that we're moving back into a more pro-inflationary regime. I think a number of reasons. Number one, we do believe that geopolitical tensions and receding globalization is going to be with us. We're no longer in the period post-global financial crisis. Tensions will remain. Maybe the tone is going to be different from the previous Trump administration, but the message is going to be remaining the same. So as a result of that, I think cost prices will remain high. Supply chains are going to be coming closer to home from Asia, be it Eastern Europe, be it Mexico, the US. But also, I think that the level of stimulus which has been applied is magnitude times more than it was at the GFC. So I do see inflationary pressures coming through and being more sticky. However, we do not see an inflationary crisis because the central banks have got the credibility and the tools to take action when need be. And the delicate line, which I think you're trying to get to, is that sort of 2.5% to 3%. We would not expect stickiness to move beyond that. I think that's where we're expected to be, 2.5% to 3%.
All right, Thanos, thanks very much for joining us. Pleasure having you. Your insight in terms of what we should be dealing with this morning. Thanos Papasavvas, ABP Invest founder and chief investment officer. Now, he's talking about inflation being sticky. And later on today, I'm going to talk to an executive who can address that specifically. Daimler is unveiling the all-electric Mercedes EQS. We're going to speak to the CEO, Ola Källenius, and ask him about the chip shortage and higher aluminum prices. Kaylee, he could tell us really if he's seeing inflation come through.
Well, Matt, we also have some breaking news. Bank of America seemingly reporting earnings early. First quarter equities trading revenue coming in well ahead of estimates. Again, as we saw with the banks reporting yesterday, $1.83 billion. The estimate was for $1.64 billion. Earnings per share up in a big way on a year-on-year basis, 86 cents versus 40 cents a year ago. Net revenue for interest expense, 22.8 billion. That's up about 0.2% on a year-on-year basis. Investment banking revenue coming in at $2.25 billion. Right now, shares are up by about 0.8% at this point in pre-market trading, Matt.
Yeah, I'm looking at them right now, looking at $40.15. So they haven't moved too much, although to be fair, you're breaking those headlines live as they come out. It's a big beat. 40 cents was the estimate, and 86 cents is the number. So more than double what the street was looking for. It'll be interesting to see if we get any more lines from Bank of America on things like reserve releases, on things like loan demand, especially the outlook, obviously, is going to be key here. But they are coming out early, so it's currently 5:21 a.m. in New York, and we weren't expecting these earnings to come out until, what, 6:45, I think was the time. So very interesting that they do come out so early, especially since it's a beat. Typically, if someone comes out early, that's because they have something to fess up to. It doesn't look like that's the case right here.
Yeah, and these are healthy beats, Matt. I mean, especially on trading. Again, this is consistent with the theme we've already seen, but for FICC trading revenue, that came in at $3.25 billion. The estimate was just for $2.73 billion. So again, the trading strength. There is, though, a question, Matt, about how long that can last as some of the market volatility subdues. We want to get more on this now. Bloomberg Wall Street correspondent Sonali Basak is here with us. Sonali, out early. We're all still digesting this. I'm now seeing a headline, reserve release of $2.7 billion. What are your first thoughts?
Yeah, that reserve release of $2.7 billion is a hefty number. We know they reserve less than JP Morgan, but that is more than $1 billion more than what we saw over at Wells Fargo. So signals to you that Bank of America sees a pretty good view of the economy ahead. Again, those trading beats are significant for Bank of America, which has seen a lot of changes at its trading division, right? They're not as big as Goldman Sachs and JP Morgan in that space, but it is significant to see them gain some share in that division, both in trading and investment banking.
Sonali, I want to just break in here with another breaking headline coming across the Bloomberg terminal, a red-hot, sticky headline on Huarong. We've been talking about the Chinese bad bank possibly defaulting on debt. This is the story that's really captivated Asia because it's $42 billion worth of debt, most of it offshore, that's at stake here. Huarong is now said to plan full repayment of its bonds due April 27th. So the question was, as state-owned entities continually default more than private borrowers in China, the question has been, will they step up and back it up? The leader of this bad bank was executed 11 weeks ago, so it's a very serious story. We can get back to the Bank of America story now, but I just think Huarong is really interesting to cover, Sonali, and you know, the trading revenue coming out at $5.08 billion versus $4.37 billion is a great thing, but the question is, will that continue with what the VIX is down at 17 now again? So can trading continue to be a huge amount of ammunition for the current quarter?
Yeah, it's a great question, too, and it's a question we'll be asking of Citigroup as well, because fixed income, while it was a great quarter, it wasn't great in every single business. Currencies were weak at many places, and that's a big business for Citigroup. Citigroup is a bigger trading desk. With that said, again, as we had mentioned, you know, more than twice the EPS that was being expected. That could be helped with reserve releases. And a question for CEO Brian Moynihan is how much of those reserve releases are contributing at the end of the day to that tangible return on tangible equity? What is the more normalized rate of returns moving forward? Jamie Dimon had mentioned yesterday for JP Morgan that's closer to 17% if we didn't see those reserve releases. So again, trading beat, fixed income trading beat, net interest income a slight rise here, so that's good news. And then also, pretty strong results. It looks like around the corner. Sustainability is the big question, but that's more on the loan demand here, right? Even for Bank of America than trading.
Well, and on the loan
Kaylee,
demand,
let's clarify the. Let's clarify the EPS number, actually, Kaylee, because I said twice expected, and I'll issue my first surveillance correct. It's not twice what was expected. It's twice the figure that we saw in the same quarter last year. So 40 cents was what they earned a year ago in this reporting quarter. Right. 86 cents is what they're posting for this quarter. Actually, net interest income was pretty much in line with what was expected, 10.31 billion compared to 10.32 billion. So we're seeing beats here, but they're not the huge beats. They're just big compared to what they were in the pandemic quarter of last year, right, Kaylee?
Right, and of course expectations were already high, so there is a question of how much they'll actually be rewarded for those beats. I think financials broadly were expected to see earnings up nearly 70%, so while 40 cents a year ago to 86 cents now seems like huge, it was already mostly baked in. Shonali, we are continuing to get headlines out. The Bank of America CEO Brian Moynihan saying he sees an accelerating recovery and that the first quarter reflects an improved macro outlook. We heard from Jamie Dimon over at JP Morgan yesterday saying that recovery and outlook is why loan growth is so stagnant. So what does this mean for Bank of America?
Yeah, it's a question on what happens in the second half of the year at this point, right? Because we did hear a Wells Fargo guide that it would be a little better in terms of demand in the second half of the year. Another thing that JP Morgan said is that some of that commercial loan demand is making up for what we're seeing in the weakness in consumer demand. And what we're seeing here from Bank of America is strong underwriting results as well. Advisory fees on deals are better than expected. Equity underwriting fees up 218%. It is better than expected. Debt underwriting is still also coming in strong. Like trading, the question is the sustainability of those results as well. But generally, a good thing for Bank of America to see a strengthening consumer. Loan demand, again, net interest income, what happens at the end of the day? Bank of America is rising a little bit in early trading, so at least in the early take, Shonali, investors are biting on.
I'm going to bring in Tim Morgan right now, Shonali, from Keefe, Bruyette & Woods. He's a strategist for FinTech and U.S. financials. Let me get your take, Tim, on the numbers that we're seeing come through here. They are, for the most part, beats, but they're not massive beats, the likes of which we saw yesterday, and we are continuing to see reserve releases in very large quantities, $2.7 billion.
Absolutely right, Matt. Thanks for having me on this morning. You guys have taken a lot of my thunder this morning, and obviously Bank of America has stolen the news today too. But I mean, you're absolutely right. I mean, the big thing to bear in mind is that the banks that have got the most exposure to capital markets activity are clearly the ones that are benefiting the most from the sort of surge that we had in the first quarter in trading activity and capital raising, which was, of course, in part led by the whole SPAC drive that we've had. It's important to remember that because of all the money that's been thrown at the U.S. consumer from stimulus and so forth, loan growth is actually still quite weak. And even though interest rates have started to go back up, we have come nowhere near the inflection point of seeing the banks benefit from increases in loan demand as well as seeing those interest rates flow through. So we've still got a long way to go on good news for the banks.
I'm glad to hear you say we're nowhere near the inflection point. I think inflection point is kind of the phrase of the morning, but we're just not there yet. Low rates continue to be a challenge, according to Brian Moynihan in a statement. I'll remind viewers and listeners that we are going to talk to Brian Moynihan directly at 5 p.m. New York time. Tim, when you look at the kind of interest income that we're seeing, 10.31 billion, it's not far off the estimate of 10.32 billion. This is the bread and butter for the bank, right? They need that inflection point to make money, lending money. When will we get there?
That's absolutely right, Matt. But you need to bear in mind that, for example, on credit card debt, consumers are actually carrying about 20% less on their credit card balances than they were at this time last year. So we're really anxious, excited to see what's going to happen through the summer. Of course, our fingers are all crossed that reopening doesn't find yet another dramatic negative turn in the COVID story. But provided that we can have a successful reopening in the U.S. driven by vaccines and herd immunity, or however you want to characterize it, we'd like to see consumers take these really strong balance sheets with a lot of their debt paid down and continue doing what we've seen, buying more houses, buying better cars and upgrading everything else in their lives and releasing that pent-up demand. And hopefully that'll see loan growth demand pick up a lot in the second half, and that in turn will drive business spending, business investment, and everything else into 2022. So we're really excited. We still think we've got a long way to go.
So if loan growth demand is going to be picking up, is that enough to carry these banks forward if we see things falling off when it comes to capital markets, for example? Because yes, trading revenues have been beating. It's been an incredible couple of quarters, but volatility is going down. There is a sense that that cannot continue forever.
It's very hard after such a blockbuster quarter to expect it to continue. And when we look at our estimates for next year now on a lot of these big banks, our earnings will actually be down versus this year. But as you guys have said, we're not seeing the market discount these earnings or carry these forward as if they were expected to last. The real question is, and what the market puts the highest multiple on, are the high quality earnings that the banks get from its lending businesses, not these volatile capital markets businesses. But at the same time, I would say, with recovery and with the huge amount of liquidity we've got, plus the infrastructure bills that could be coming and the stimulus funds that are still flowing, there's still plenty of tailwind to spending, to the economy. And we've heard all the CEOs that have reported so far express their optimism that this is going to be the beginning of the roaring 20s of this century.
Tim, sit tight. I want to go back to Sonali Basak, our Wall Street correspondent. I know she's continuing to dig through these results. Sonali, what else do we know at this point?
Yeah, we're just going through the numbers. One other thing, to the converse point of loan demand lightening, you also have fewer charge-offs as the consumer strengthens. So they're saying charge-offs decreased by 7%. So there is a benefit you get from the economy getting better. Again, pouring through these FIC and equities numbers as well. To Matt's point, they are beats. They're not resounding beats, right? So $1.8 billion worth of equities trading revenue, that compares to $1.6 billion that analysts were expecting. How much fuel is in that fire there? Are we seeing an outsized gain over at Goldman Sachs, JP Morgan, and tomorrow Morgan Stanley? Questions about market share, I'm sure the executives will address on the call upcoming.
I want to get back to you, Tim. I heard you have a little cowboy alert set up there, yeehaw. And I'm wondering what's on your dashboard. What do you watch as you're preparing for a market open on a day like this?
Well, of course, Matt, I've got my Bloomberg, TMSG app, which is screaming because my clients are, asking me what I think of the results. But, I use actually the EVTS function on Bloomberg every morning religiously. It does a great job of showing us what the estimates are and links to the press releases and the conference calls for all the banks. Bloomberg is definitely the best way to start your day in earnings season.
So what do you want to hear from Brian Moynihan later? I'm going to talk to the anchor interviewing him and feed your questions through. What would you ask Brian Moynihan?
Well, it's very hard to ask much more than we've already had from the existing CEOs. Is really with Bank of America, talking about just how they keep things firing in all their cylinders. At KBW, we're actually really interested in where things are going on financial technology and the bank's investments in IT spending. The banks, if I could put this plug in, have historically been relatively non-transparent about how they spend billions and billions of dollars on IT. And we would love to get the banks to break out more how much of that money is going into R&D, how much of it's on maintenance, how much of it can they chop for cost savings going forward if they need it, and to talk about how they're leveraging and playing with some of the most interesting technologies like fintech. We're doing a lot of work at KBW to understand these technologies, but that's for a different call, Matt.
And I want to continue to look ahead. We obviously are still expecting Citigroup out later this morning. They may or may not come on time. Bank of America obviously did not. Can you draw a line between the results we've gotten from Bank of America as well as from the likes of JP Morgan yesterday? And what are your expectations for Citigroup this morning?
Well, thanks for that. It's a good question. The difference for us with Citigroup and Wells Fargo is that these banks are still trading near book value, whereas the other big banks are actually trading at almost towards or over 2 times book. Citi and Wells Fargo are both still coming out of regulatory penalty boxes, and their management teams really need to prove to shareholders that they're making the changes regulators are asking of them and addressing problems with their business mixes and profitability and efficiency. So we're really looking for a completely different conversation. And of course, with Citi, we also are enjoying another of our first quarterly calls with their new CEO and to hear how she's coming to grips with her new responsibilities. With Bank of America, Bank of America and JP are the two most expensive banks, and Brian Moynihan and Jamie Dimon, the most legendary CEOs in recent times. So there's a big difference in how investors are setting their expectations for what they're hearing from these banks.
And a big difference, Tim, in how investors set their expectations for the U.S. financials that you cover as opposed to the fintech space that you cover. What was your reaction to Coinbase yesterday? We had a frenzied open up to 430, and then it dropped at the end of the session down to 328. Apparently, Cathie Wood and ARK went in there and swept up a couple $100 million worth of shares. Now it's back up in the pre-market. How does Coinbase look to you?
Oh, thanks, Matt. We don't cover Coinbase, and I haven't actually cleared comment on that with compliance today. But let's just say that it is pretty logical to expect the largest cryptocurrency company in the public market as a pure play to have attracted a ton of attention yesterday. I think we saw about $26 billion worth of volume in the stock. KBW, we've been very excited to be involved with some smaller names like Silvergate Bank, for example, who are also a pure and licensed banking play in the space. But there's no question yesterday, Coinbase was squeezing out volume from a lot of other crypto plays, and we saw a lot of other crypto plays down as people made room to add Coinbase.
Yeah, an interesting day indeed. Thank you so much, Tim Morgan, KBW desk strategist for FinTech and U.S. financials, and of course to Bloomberg's Sonali Basak, joining us, rushing to set to break down these Bank of America earnings. We so appreciate it. I want to reset now and take a look at what's going on in the broader markets. We are seeing U.S. futures at the session highs after those early results from Bank of America. We're up right now by about 0.5% on S&P E-minis, or around 20 points. Stocks in Europe are higher as well. We are seeing a bit into the bond market, yields down 2 basis points on the 10-year yield. We're sitting right at 1.61%. And then, of course, watching Bitcoin as well, not at the record highs around 64,000, but recovering a bit from yesterday's losses, sitting at 62,700. Of course, that factors into the Coinbase conversation. I want to check on some of those stocks, including Coinbase, moving in pre-market trading. Of course, Bank of America, having just reported, it's up about 1%, as Matt and I have been discussing. A lot of the good news already baked in, so not an outsized reaction, but it is a positive one. Coinbase, which we were just talking about, up 11.5% in early hours. Still, though, below its opening price. That opening price was $381. Right now, it's trading around $366. There are some retailers moving to the upside as well. American Eagle out with a positive first quarter revenue outlook, beat expectations. It's up 4%. Macy's up nearly 3%. Some optimism in retailers, of course, ahead of the U.S. retail sales data we're going to get in about 3 hours' time, Matt.
Yeah, we'll be watching that very closely. We've got a lot of great data coming out today, or important data, I should say, Kaylee, coming out today, including initial jobless claims. Also, one of the biggest events of the day, we're going to speak to Bank of America CEO Brian Moynihan. I was just talking to Tim Morgan about that. Our own David Weston going to interview the Bank of America CEO on the earnings release that just came out early and ask him about loan demand in the U.S. economy as well. That's at 5 p.m. New York time, 10 p.m. in London. It'll be 11 o'clock at night here in Berlin, but I'm going to watch it anyway. I'm going to stay up and watch Weston interview Moynihan. Coming up next, Johnson & Johnson's coronavirus vaccine remains on pause after the CDC panel. We're going to get an update with Jennifer Nuzzo, Johns Hopkins Center for Health Security senior scholar. This is Bloomberg.
Ladies and gentlemen, I'm going to place a new order to buy euro. The price I'm looking to buy, 119.806. Okay, you still have time. We placed order at 119.806. So if you're looking to trade euro, you can place an order and you can follow our trades. Stay with me and we'll let you know what's going to happen next. If you want to get a strategy, you can go to company.co.uk website and you can get the strategy from us. We have live support for live. If you will have any questions, you can always ask us. We have live seminars. We have one-to-one sessions. So you can join us and start making good profit. Start trade like professional day traders. Maybe it will become your new profession. Okay, looks like we will get filled. Let's see, I'll tell you in a second. I'm still waiting if anything will happen. Let me see as well what's happened with Bitcoin, because we're still waiting until this order will be filled. We're not in yet, but with Euro, sorry, nothing yet. I'll let you know later on what's going to happen. Okay, I'll speak to you later, guys.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Based on the current data, Janssen believes the overall benefit-risk profile for our vaccine is positive across the population for which it's authorized.
This risk could be managed by inclusion of warning statements in the EUA fact sheets, along with coordinated communications from FDA, CDC, and others to inform healthcare providers and vaccine recipients of the potential risk.
Members of a CDC panel discussing the Johnson & Johnson coronavirus vaccine. Discussion ended without a vote, and the shot remains on pause. Joining us now, Jennifer Nuzzo, Johns Hopkins Center for Health Security Senior Scholar. Jennifer, great to have you here. When do you expect the CDC to reach a conclusion? And the longer it takes, how much damage will be done reputationally to this vaccine?
Yeah, so
okay, guys, position open on Euro. This is long position at 119.806. Okay, well done, guys. If you decided to trade this pair, stay with me and follow our trades and copy everything we do. Okay, I'll speak to you later.
Monmouth University poll released yesterday found 21% of Americans said they will never get a vaccine if they can avoid it. If that many people are hesitant to get a shot, what does that mean for herd immunity? And I would have to imagine this issue around J&J makes that even worse.
Yeah, I mean, we don't know for sure how the issue is going to change hesitancy here in the U.S. We have seen those poll numbers change, and I am hopeful that with continued messaging and continued work to reach those people that we can close the gap a bit. But that's exactly the worry. We need to ensure that people get vaccinated as soon as they're eligible and as quickly as possible, because we want to be done with this pandemic, and the fastest path of doing that is to getting all adults who are eligible vaccinated.
Do we know at this point commonalities that the victims of these rare blood clots shared? Because if we could narrow down the kind of people who are susceptible to problems, then likely everyone else would be fine going in to get it.
So that's exactly what the CDC panel is doing in their deliberations. Right now, we know that the 6 cases that they're reviewing are in women who are under the age of 50. But it's not fully known if that's truly the only risk group, and whether there will be additional reports in the coming days now that there's been a brighter light shine on this condition. And so, you know, I hope that we can confine the risk to a particular group and then just offer them an alternative vaccine. But as of yet, it's still unknown if this is the true risk group.
Jennifer, leaving this rare blood clot issue aside, one of the most asked questions that we get is, what can vaccinated people do? What do we know about if a vaccinated person is able to transmit the disease, for example, or if a vaccinated person is able to get the disease without showing symptoms?
So there have been a few relatively rare cases so far reported of people getting infected after getting vaccinated. But many of them don't have any symptoms, and they all were fine. And so I think we absolutely first have to think of this vaccine as being our best tool in defanging the virus, making it no longer a lethal threat for people. But in terms of if you've been vaccinated, what can you do? I mean, I think you have a lot more freedoms now. The CDC has said that it's okay to travel, it's okay to gather indoors, maskless with other vaccinated people. Right now, we still need people to maintain distancing and masks in public spaces, largely due to compliance. I mean, when we still have dangerously high levels of infections occurring each day, we need to maintain the norms of social distancing and protection through masks. And so I think that's going to be the norm, hopefully, for quite a bit. But then I do hope that as our number of cases falls over the summer, as we've seen happen in other places like Israel, that we can start to relax measures a bit.
Jennifer, thanks so much for joining us. Jennifer Nuzzo there of Johns Hopkins. The Johns Hopkins Bloomberg School of Public Health is supported, of course, by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Now, Bank America traders reap another windfall. Later today, we're going to speak to the Bank America CEO, Brian Moynihan, about what those traders did for earnings and what his expectations are for loan demand in the U.S. economy. That's at 5 p.m. New York time, 10 p.m. in London. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Matt Miller in Berlin. Francine Lacqua is off today. Matt, of course, the market continuing to digest the early results out of Bank of America. Earnings more than doubling on a year-on-year basis from 40 cents in the same period a year ago to 86 cents in the first quarter. That really driven by trading, both equities trading revenue of $1.8 billion and FICC trading revenue of $3.25 billion coming in ahead of estimates. Also notable, a $2.7 billion release of reserves that helped boost net income by 47%. And then new headlines crossing the terminal, the bank announcing a $25 billion stock buyback plan, and Bank of America saying it expects to distribute additional capital to shareholders after restrictions expire. We are still awaiting more clarity on loan growth, which was a big theme for the banks yesterday. Joining us now, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're also looking at these results. What is your biggest takeaway?
Well, my biggest takeaway is buried in the release, and Bank of America does a really good release, Kaylee. It's got great percentage changes in it, and it just shows a digital platform that Brian Moynihan and his team have just developed over the years. We've got this at other banks as well, but it's just, to me, Kaylee, out 5 years going to be a digital haves and have-nots, and Bank of America's penetration, including 49% of revenue coming off digital and consumer banking, is just extraordinary.
To what extent, Tom, has Coinbase stolen the spotlight from these big banks?
I don't buy it for a minute.
It was briefly.
I don't buy it for a minute, Matt.
No?
I don't buy it for a minute. I think it's its own unique beast, and it will go its way, and it'll be at the vicissitudes of what the price of Bitcoin does. Bitcoin goes to 100. Coinbase is a Dow Jones stock.
Well, it's currently worth a little bit less than $100 billion. There was a big pop yesterday and then a drop. It looks like Cathie Wood swooped in and bought some at the lows. But you don't buy that this is a fintech threat to JP Morgan and Bank of America.
May be on a narrow basis within Bitcoin. Absolutely. It's a threat there. It's a threat also because the banks are uncertain if they really want to dive into the crypto world. You know, it's a back and forth every day. But in terms of the general bank statement and the mass of this, we've got to remember, Matt, how large these banks are. We forget that. They are measuring $3 trillion of assets as a blended each. You put JP Morgan and Bank of America together, and I'm going to say off the top of my head, it's 25% of American annual GDP.
We also heard from Brian Moynihan talking about net interest income, and he said low interest rates continue to challenge revenue. Yeah, what's your take on that?
Well, my take on it is there. Allison Williams, of course, is encyclopedic on this, but we disagreed on this a little bit yesterday. John was really emphasizing the loan demand was tepid, and certainly we saw that at the bank as well. I would look at the ancillary businesses, which were really quite good, I thought, and show the health. The key thing, Kaylee, which you mentioned, is the reaffirmation of a share buyback. This is going to be a major theme through earnings season, is what do you do with all that cash?
Tom, Warong has come out and said they are going to pay bondholders for the April 27th payment. This is huge, right? Because if state-owned enterprises don't stand behind their debt, it is going to mean a real new climate for offshore investing.
Well, that's true. I think it's very, very fluid. Not only is it fluid in China and Asia, but it's also very fluid in Russia, as we saw the headlines 20 minutes ago about sanctions and the Russian response to it. I spent the last 24 hours reading everything I could on Afghanistan, and I would suggest the linkage of foreign policy into finance and banking is really tangible right now, Matt.
All right, Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much. And of course, Tom, John, and Lisa will be taking you through Citigroup's results. They are due out at 8 a.m. Eastern time. We will see whether or not those are on time. Now, of course, we're looking at some other things today, Matt. What are you, I am watching U.S. retail sales due out at 8:30 a.m. Eastern. It could be a blowout. Some economists are expecting growth of 10% plus as those stimulus checks hit the economy and shops reopen. So it should be a pretty exciting number.
Yeah, for sure. I'm also still going to watch Warong, right? Because this is, I think, really telling as to whether China stands behind the debt of its state-owned enterprises or not. It's fascinating to me that more state-owned enterprise debt is defaulted on than private debt in China, and you wouldn't have expected that. I'm also watching the Ken Burns documentary on Ernest Hemingway. I have to tell you, it's really good. It's a are you watching a 6-hour movie on Hemingway, and I think it's just amazing. He's very good. I love Peter Coyote narrating that, and what's his name from Dumb and Dumber does the voice of Ernest Hemingway. I think it's really incredibly well done.
Yep, it's all good. All right, coming up in the next hour, Conrad DeQuados, Bream Capital Senior Economic Advisor. This is Bloomberg.
Okay, traders, also I will place a new order to sell short euro. The price I'm looking to sell, 119.808. So if you want to trade euro, if you want to sell short euro, here is your chance. Just above our position that we opened a few minutes ago at 119.806. I open another order, short. I place another order to sell short. Let's see if I'll be able. Probably this is too late, but let's see. Let's see what's going to happen. Okay, guys, I'll speak to you later. If you don't know why and how to do this, all you have to do, you have to just learn how to do this. We can provide this strategy for you, and all you have to do, just go to company.co.uk and get the strategy. Stay safe. Okay, guys.
The group is counting on the growth.
We see company after company. These are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Bar to meet for earnings, but I think there's potential for some decent pockets of outperformance.
I think the buyback and dividend story is going to be important for the banks going forward.
When you bounce back from the kind of shutdown we had, you're just going to end up with readings of inflation.
2021 inflation is important. I think for markets, it's 2022 inflation that's more important still.
Everything we follow would suggest every bit of inflation is being passed through and then some.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here comes the boom from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Bank earnings top of mind this morning, but Tom Keene, we've got to push towards retail sales in America a couple of hours away.
Agree. We're going to get the Bank of America out a little bit early this morning. I don't know why that happened. We'll get to it in a moment here. I agree, John. Retail sales is front and center, and it's really that 70% of our American economy, and it's a boom economy. How much did retail sales boom? I'm going to go to the control group when we see those numbers.
I agree with you. Those numbers set to be big. Some big expectations out there. Tom, Brian Moynihan had something to say. We're flush with cash. Consumers flush with cash. Businesses flush with cash. At the aggregate level, at least, that's the headline story in America.
CFA 101, go right back to asset size. The two banks together, JP Morgan and Bank of America, are $6.5 trillion in assets. Granted, there's a lot of noise in there, but that's indicative of the amount of money, the amount of stuff that's out there for this American economy to drive forward.
We've got to do a couple of things this morning. City earnings coming out in a couple of hours' time. Lisa Abramowitz, we've got to get to retail sales too.
That's actually paired with the story of all this cash on the sidelines, or all these cash deposit accounts. People have so much money to spend. They're spending it now. And actually, after the stimulus checks went out on March 17th, there was a big pickup in credit card sales. So that actually feeds into this high retail sales figure. There is a question, though, John, and this is going to be the question we'll be hearing throughout the morning. How long can this boom last? How much can people increase their spending, especially given the frictions in services, given the lack of hiring, as well as in physical goods with supply chain delays?
Peter Chair of Economy Securities nailed it earlier this week, Tom. He said it's not about whether we get a boom, we'll get one. It's about how big it will be and how last it will long.
Yeah, well, I agree with it. You nailed that, John. That's okay.
Thank you.
That was a transitory error.
This is it.
This is it.
It's the price action this morning. I'll escape this one. Equity futures up 18. How long it will last, how last it will long. There we go. The S&P 500, 41.36 on the S&P. We advanced 0.4%. Bank of America doing nicely in the pre-market as well. That bank stock up by around about 2.28% this morning. Outside of that, bond yields down by 2 basis points on a 10-year. So 161.30, Tom. It's not about the data later. It's about how this market responds to it at 8:30 Eastern. That could be interesting.
I want to stop the show, John, here on one data point, which I noticed as you get prepared for your show tomorrow, the real yield, all that matters. And that is the real yield negative 0.74%. To me, that's indicative of this pullback we've seen in inflation worries.
I thought it sums really interesting, Tom. I agree with you. We had CPI earlier this week. What happened to CPI?
That's a transitory agreement.
Hotter than expected CPI, and Treasuries caught a bid. Yields were lower on the session. That's where we're at right now. I thought that was interesting.
Yeah, given that it's a boom economy, I mean, come on, we got an 8% GDP plus economy, and we're going the other way on new dollar weakness, et cetera.
I love how committed you are to this transitory game. That you're still drinking, even if you say it. Even if you say
Karen switched to 18 years, so that helps.
That's pretty impressive. Lisa, what a busy morning we've got coming up.
And it's really tied to the big question that you have, which is we're going to get incredible numbers. Why is it that people are actually bringing back their expectations for inflations and for yields? Perhaps the cash is an important story for this. Citigroup coming out, expected around 8 a.m., although if Bank of America is any guide, we're going to expect it in a couple of minutes here. They're expected their Q1 earnings. Really interested to hear what they have to say about loan demand. That has been the story that we got yesterday. We haven't necessarily heard that much color around it from Bank of America yet. Yet that, to me, is key in sort of how much dynamism there is beyond this cash-fueled boom into Q3 and Q4. 8:30 a.m. March retail sales. The range of estimates here, dramatic. Bank of America coming out with a more than 11% jump in the expected retail sales. They have gotten it right. They are looking at credit card bills. The credit people are charging a lot more, and this really is on the heels of that March 17th stimulus payment from the Biden administration. Then at 10 a.m., we get a whole host of other data from February business inventories as well as housing market index of builders. They will be very optimistic. But John, here is the issue, right? There is a lot of money in the housing market more than ever. People want to go out, they want to buy, they want to live in suburban areas, yet there isn't the inventory. You're seeing this across the market, the idea of some of the frictions in the markets that restrict how much money people can deploy deploy, and how much that could fuel an economic recovery?
The supply side of the story, the supply side of the economy has got to respond through the year, and how things balance out. I think it's going to be really interesting. I agree. Lisa, thank you. Let's turn to the bank earnings. Out a little bit early this morning from Bank of America. Bloomberg's Shanali Basak was racing into the office to catch up. Shanali, everyone was so relaxed waiting for, what, 6:45 Eastern. Then Brian had something to say and bang, here are the numbers.
Yeah, absolutely. But there's one line that really sums up it all, and it's one of the first lines he makes in his presentation. The economic recovery is gaining speed. So, yesterday we were so worried about loan demand, but, Bank of America is showing you here that if consumers are not taking out loans, they're finding other ways to put their money to work. For Bank of America, one thing that means is $100 billion more in investment assets, for example. Can Bank of America still find more ways to make money even amid that tepid loan demand? They've been shifting towards fee-based revenue for some time now. The other thing Bank of America had done this morning was say that they're going to buy back $25 billion worth of stock over time. So Brian Moynihan is showing you we're not only making money, we're making money enough to give you back billions of dollars to investors at a time when costs are still $2 billion above where they were before this pandemic.
Shanali, looking forward to catching up through the morning. Citigroup coming out a little bit later. No idea what time, though, Tom, given that Bank of America came out about, what, an hour early?
I like it. It makes it like
Do you
a
like
sport,
that? Do you like that?
It's like sport, yeah.
We'll cover those numbers when they come out.
Like a Swiss watch.
Not quite. Conrad de Quadros joining us now. Bring Capital Senior Economic Advisor. Conrad, retail sales in America, that number at 8:30 Eastern Time. We've got huge expectations. We've talked about Bank of America through the week, 11.5%, 10% almost here at Bloomberg Economics. Conrad, what are you looking for?
Good morning to you all. Well, I too expect that it will be a very strong report, and we have the combination of labor market that it's starting to recover. But most importantly, not only do we have the accumulated savings that you guys have been talking about from the past round of stimulus payments, not all of which was spent. We have an additional round of stimulus payments that was a multiple of that, obviously, in the middle of March. So there's a lot of cash sitting around. Most importantly, the economy is starting to open. So what we have is this retail sales report, which is not only goods spending. It does include some services spending with food services and drinking places. And with those establishments starting to open up, that's going to be a particular area of strength. So I expect that this will be a very strong report. But going forward, what's going to power consumer spending is the services side of the economy, not the goods side. So it's not going to be predominantly retail sales. It's going to be other areas of the economy that are going to really drive services spending, which is the biggest component of consumer spending. And so I think that that's going to give us some very strong spending reports through the second and third quarters.
And not, Conrad, to look at the x-axis or timeline of the overall economy, but let's just look at retail sales. Are you modeling at Breen that retail sales will be great Q2, retail sales will be great Q3, and what do? Fall off a cliff in time for Christmas?
Well, I don't think we'll see retail sales fall off a cliff, but I do think there's some potential that we've brought forward some good spending that would have occurred in the second and third quarter. So, for example, all of the computer devices that have been purchased, the TVs, a lot of the good spending that has occurred over the last year, because we have retail sales that are 6% higher than they were in February of last year, despite everything else that's gone on in the economy. So I think there has been some bringing forward of some of the retail spending that would have occurred over the next couple of quarters. But even as that potentially slows, I think that will be more than offset by a significant pickup in services spending. So the consumer is going to be very strong in the second and third quarter.
How long do you think we're going to be talking about labor market shortages, the idea that hotels and ride-sharing services can't get enough people to fill the slots to actually meet the demand that is resurgent?
Well, Lisa, I think it's a great question, and I think a lot of that has to do on the progress for the virus and vaccinations, because one of the big issues, and we've seen that in the surveys, is that in some of these service-related industries, in the areas where there are shortages, people are scared to go back to work. And as there's a higher degree of vaccinations and as the virus gets under control, which I expect it will over the summer, those people will be willing to go back to work. Now, there are other areas where it might be more persistent, in the transportation area, for example, because there we're going to have a significant backlog of demand, and obviously that requires higher levels of training and experience. So in areas like transportation and the logistics areas that are going to be very important, I think those those shortages are going to be long-lived. But you also, Lisa, touched on another point when you talked about inventories. And there, we're looking at this strong demand through the second and third quarter, predominantly driven by the consumer. But what's happening, as you said, inventories are being run down. And going into this, inventory levels are already too low. They've gotten even lower. And so as we move forward through the year, I see a passing off of the growth to the production and inventory side, because even not just to meet demand, but to build up those inventory levels again, the production sector is really going to have to kick into a higher gear, and that's going to be a source of support to the economy towards the end of the year and into 2022.
Conrad, what a year ahead we've got coming up. Looking forward to exploring it with you. Conrad de Quadros there of Breen Capital, ahead of a retail sales print in America. Tom, you were looking at the control group. Here's the median estimate, positive 7.2% for the month of March.
These are out-of-body numbers, and they're really, extraordinary, and we'll have to get a lot of the view forward from the different retail stories, particularly the big box, the dominant consumer retail as well. But I look forward to be a really nuanced report this morning, John.
Do you know what I'm looking forward to? Just to see how the front end of this bond market responds. And I don't think anyone expects a response. But Lisa, that'll be the test for me in the months to come. Do we finally start to get a move at the front end? And that will be the test of the Fed's credibility, so to speak. Well, and I don't think we're there yet.
The credibility. Did you hear what Jay Powell had to say yesterday? He basically came out and said, you guys are all too focused on expectations. We're watching the data just